ticking, but I won't slow down. Building my empire in this buzzing town. Casting my vision on the silver screen. My funded life, a vivid sheen. My funded futures light the way.
Good morning, traders. Welcome to My Funded Futures and My Funded TV. Welcome, Bull Barbie, and welcome, Nick Does Futures.
What's going on, guys?
Good
Happy
morning.
birthday, Burke.
Happy birthday, Burke.
That cat's out of the bag. Happy birthday.
How are you guys this morning? Any trades this morning?
Good.
Yeah, I
Doing
really,
so well.
I love that move right off of the data, but I missed it. So
Yeah, nice long. All the longs made some money. Raphael says win.
yeah, it was right at that spot. I was annoyed I missed that.
Dang
Yeah, I'm
it.
looking to get long. I'm a little late. I didn't get to the charts until I got to the stream. But yeah, this is actually what I'm looking to long at. So we get a retest here, or maybe a close above here. I'll look to go long, mainly due to the fact that obvious market structure for people who don't understand how I trade. But we've been inversing. Let me start with a 4-hour here. We inversed these bearish gaps. Everyone was kind of thinking of sell off yesterday after we went lower. Then we started to move higher, started tracking higher. And then obviously the move here at 8 a.m. was very, very nice. So I'm just expecting, higher highs to, just be put in. So I'm maybe move here and then before going back to this Tuesday high. That's obvious to me. I'd be really surprised if it gets below here. I said that yesterday and it in fact did that. So, yeah, kind of the same game plan, looking for longs. Looking for longs today. And gold, I don't know what this thing wants to do. Like I said, the more I look at it, the more confused I get. And then same with ES, right? ES has more room to go higher. And I'll probably be looking to get long on ES just due to how, chaotic NQ has been, recently. And ES has just been a little bit better to be long in. So that's kind of all I'm watching. It's reacting from this 4-hour gap in here, which I'm using to frame my lower time frame entry, and then same for NQ in here as well. It's just a little bit smaller. And then we have a 1-hour gap that we're reacting from as well. So yeah,
Looking for longs. You're looking at ES today.
yeah, mainly ES to me just looks a little bit stronger. And I'll probably look to go long on that one.
Nice. Mr. Smith passed 2 funded. And
Oh, wow.
Congratulations. That's awesome. Way to get our morning started with some great news. I love it. Barbie, what are you thinking this morning?
Well, so this is that box I keep talking about where the ES is just nice and happy and balanced and unproductive, and we're still in the middle of it. We kind of peeked out over it the other day. I got kind of excited, and then we're right back into it. As long as we're in this box, I'm just not super excited about like A+ setups. Not that we can't get any. It's just I'm having a harder time finding them. So I'm taking this into context and trying to give myself a little bit of grace and a little bit of extra patience so that I can actually execute some things in here. But yeah, so I liked this bounce off of 6,300. That was kind of what I was looking for. I was hoping that would kind of hold off until the market opened, but we already got that. So we are kind of in this trend line higher on the hourly. So I want to kind of see if we get some retracement back down through this hourly candle to buy. This is that same kind of situation. I keep talking about the same levels over and over again. Sometimes I get kind of bored with it, but basically we have the 62.85. That's a major level in the market. If we could get away from it, that would be cool. But until then, I'm just kind of watching it as being a major point of support or resistance. And we're above it. So above it I'm more bullish above 62.85 than if we're below it. So we're definitely above it again. And again, this trend line, you can kind of see higher highs, higher lows, higher highs, higher lows on the hourly. So that is the trend we're on the hourly. I'm not crazy about just straight up buying the 63.17 right now. I want to see if the market opens and does give us some retracement in here, but we are at the kind of the next level that could be kind of that breakout point. So we've been dying for a short squeeze or a major retracement. Still hoping for that kind of action, but we'll see if it's today. Hopefully today's the day. It's been waiting for that move.
It's very promising. The data, it seemed all very positive this morning.
Well, yeah, the market's reaction always matters more than the data, but the unemployment claims were down and they were below expectations and below the previous. So that's really good. So retail sales is up over expectations. Everything was positive.
More positive than
Advocate.
what was expected. Yeah.
Yeah.
Let's get this party started, you guys. Let's set the bounty. Let's get our numbers up. What should we set it at? Chat, what are your thoughts? Barbie, Nick, what do you guys think? I think we did 777 yesterday.
Yeah, we
but
can.
should we crank it up a little bit?
Yeah, Thursday, the more we're going. I did enter in right here, by the way.
Ooh, let's see it.
Well, the limit order, like I said, got tagged. So just waiting see if we can get a move from here. Home alerts are going off for NQ. So NQ just tagged it. ES, like I said, that's the one I want to be long in. But yeah, just kind of basing it off of the 4 hour, this low in here that we made from 8 a.m. I'm anticipating expansion higher towards this high from Tuesday. So as for the bounty, what did we do? 750 yesterday?
Did we do 777?
Thought we did 777.
Yeah, right. I think we did 777. Trader 007 says 777 for today.
Of course he does. He would say that.
It is Burke's birthday.
It's Burke Day.
It's Burke Day. I wish we could set it as Burke. Okay, MyFundedFutures just dropped a poll. Are you long, shorted? Have you longed, shorted, or no market is not even open? Let's do something special. I want to do something special for Burke's birthday.
I bet we can get to 1,000 for Burke Day. Don't you?
Yeah,
1,000 for birthday. Yeah,
that would be amazing. All right, let's do it, you guys. Let's set it at 1,000 for Burke's birthday. Let's make him feel so special and so happy. Let's set it at 1,000 likes, 1,000 views. We can do it. We got this. And maybe MyFundedFutures will help us celebrate with a special giveaway today.
Birthday.
Don't keep it a secret. Put it in your Discord, on your X. You know the things.
You heard it from Barbie. All right, let's see. The market is going to open in about 12 minutes, and Nick is in a trade. Got tagged in a limit order.
Yeah, I want to also give myself room to get long again, just in case I'm just a little early, because I rarely ever go in position before 9:30. But I'm just hoping later in the week, like Wednesday, Thursday, Fridays, like usually when you start to see the weekly candle start to form. So I'm anticipating that expansion to happen. So that's kind of what I'm looking for. There are some gaps here.
Doji last week.
Huh?
We put in a doji on the weekly last week. That was showing how boring that was. Hopefully we don't get another one.
Right. I mean, yeah, I just want us to move away from the weekly open, right? The closer we get to that, the smaller that weekly body is. So yeah, I want to see this, open low, high close, somewhere up into here. Because once we hit all-time high,
in here, we've had a running joke about every time we look at the market, it's at 6,300 like this whole week.
Yeah, no, it's true. Yeah, it hasn't moved too much. So
it's just a magnet. MyFundedFutures asked Nick, how often do you trade pre-market?
Rarely ever, like 5-10% of the time. But I feel pretty confident about this high getting hit up here today or tomorrow. And even if it's not hit today, then I could still take TP somewhere in here. But yeah, I'm bullish on the market, and I want to see it move higher. So I was a little early, a little late.
Put your money where your mouth is, huh? Or wait, yeah, that's why I said that right.
Yeah, like 8:30.
I thought I said that backwards for a second.
The 8:30 move Barbie was talking about, I kind of missed that because I just wasn't looking. But
No.
yeah, like this one, this 4-hour gap in here, this hourly gap looks nice. But yeah, I just really operate before 9:30. But if I see something I like, I'll take it.
There's something extra juicy.
That sounds like a plan.
Extra squishy.
Extra squishy. So this week's promo, it continues. It's 50% off. Any account, any size, use code YouTube, and every trader gets one of those. And then after that, it's 15% off, unlimited use on starter accounts and also expert accounts. Use code YouTube to help support our channel. Thanks, guys.
Yeah, no begging.
Yeah.
Begging doesn't get it.
No, MyFundedFutures does not like begging. It's very uncool
when there's not begging.
Yes, exactly.
Yeah, there you go. There's the promo. If you haven't used it yet, 50% off any account, even if you're an established customer, you get 1/2 off this month.
Yeah, it's a great deal.
15%.
I used mine on the expert accounts.
I've been liking those more and more lately, actually.
Yeah.
And
And
there's not really anything else that's comparable to it,
Yep. And you can pass it in one day if you're so inclined.
That's what I was looking at. I was looking at I was having that issue the other day. I was like, wait, does this one have consistency? It does not. This one does not have consistency. I don't have to let this trade I don't have to stop it early.
Right? Or like I've done this before. I'll like purposely try and lose money. Yeah, just to get it under so that my second day isn't as hard for the evals, guys.
When I first started trading prop firms, I didn't read all the instructions. But the first account I traded, or it was the first trade I took in an eval account. It was like a 50K eval, so I only had to make 3K. But the first trade I made over 3K, so I was like, "Woo, done!" And then I went and logged in later that night, and it's like, "Oh, now you have to make 7,000." And I was like, "What?
What?" Yeah, exactly.
And I asked them, they're like, "Oh, you can reset it," and I was like, "Or I'll just cancel it." Like,
yeah. Renee asked, "Full porting my expert at the open?" Question mark. LOL. To each his own. We had 0-Day J on here yesterday, and that's his style. It's like smash or pass. A lot of traders do that, but to each his own, right? Like there are a lot of traders that say that is a bad idea because you can develop bad habits and then it transfers when you're in the funded side. It's very difficult to not do those bad habits. But other traders are like, I'm not going to waste my time with, trading my system in the eval stage, and they just go for it like smash or pass. So to each his own. We have at least I don't have any, like I can't tell someone how to trade, right? What are your thoughts, Nick, on that? Oh, sorry, Barbie, go ahead.
Yeah, I was gonna say what I was just hanging on to that last little point. Like everyone has that's part of this. You have to find your own trading style in the way that you're going to trade, and then not get mad at other people when they're doing it differently, because there are a lot of different ways to skin a cat.
Yes,
Don't make me say that the other way. I got in trouble.
No. Yeah, Pine Tree Trader, I know he just goes for it. Corey, the phone trader, is in the house too. And Corey, you say YOLO, go for it.
Yeah, I think it just kind of depends on where you're at, like financially. If you feel like that 18-year-old kid in college or 19-year-old kid in college, freaking, and $100 is like a lot, then probably not. But like if you, and you're just starting trading, but like if you're been in the game for a little bit, you make good money. Like, I mean, do you really want to spend 30 days trying to pass an eval? Like no,
Right.
not really. But I do think there's a difference between like passing a day and then like taking one day to pass. Like a lot of people like they get it that day and then they'll like maybe blow it that same day on not a very good setup where you can pass it in one day. Maybe it just takes 3 or 4 days to find that setup and then try to go all in on it. I think that's where people
that's a good
they get an account and they get like, oh yeah, I better do it. And I'm like, that's not the best thing to do, right?
And I feel that because like we come to the computer ready to trade and ready to do what we need to do, and then the market doesn't always give it to us. And like we're ready though, we're ready.
Yeah, and we want it now because we're ready.
And there are different ways to treat the eval. So I encourage paper trading, of course, before like your very first futures trade. I would put it in paper. But a lot of there's kind of a different opinion. So some people think stay in paper until you're ready for the pressure of an eval, and other people think treat your eval as a paper account. So those maybe you aren't going to YOLO and try to pass or smash, but there are different. That's what we talk about that a lot. There's strategies for trading, and then there's strategies for maintaining prop accounts. So you have to kind of pay attention to both.
Definitely.
And do it your way, not everybody else's way.
Yeah, I love that. Do it our own way. And it takes time to figure that out, right? Like it doesn't happen overnight. So MyFundedFutures says, you know the drill, social media giveaway. And MyFundedFutures is asking, how does 20 accounts, 20 50K starter plus accounts for the social media giveaway sound?
20? Didn't we do 15 yesterday? That's kind of wild.
Let's do it. So share the stream on X or Instagram is the first step. Tag MyFundedFutures and also MyFundedTV is the second step. And then tag me, Barbie, Nick, and that's it. And all the links are in the description. So go for that, you guys. 20 accounts will be issued for free before end of day. And tell us why you love MyFundedFutures. Why do you guys love MyFundedFutures?
Because they're the best accounts.
I'm always looking for the firm that's actually going to stand behind what they're doing and stay around in long term and are not in for a quick buck. So
the sustainability and trust.
Yeah, I've been through enough of these, enough of the prop firm drama to know that I don't want to deal with prop firm drama.
Oh gosh, no. And like to worry if you're going to get paid or not. Like I don't like that stress.
I do have some old accounts that I still worry about. Am I going to get paid off of these? So working on replacing those.
Yeah, it sucks. I think having that worry can affect your trading. Like worrying.
I don't trade those accounts as much as I would either, because I'm worried, like, are they going to make me jump through a bunch of hoops and record trades from all these different angles? I already record half my trades. Are they going to make me do more? Like, come on.
What? 10 Trading is in the house. Hey, 10 Trading. 10 Trading's been on our show also. Good morning to you. Okay, market is going to open in less than 2 minutes. NASDAQ is green by about 23 points and ES is green by about 3 points.
I agree with y'all. Matt is a really great CEO too. He's thinking long term and he's thinking big plans, and he's trying to, what I'm always talking about, where it should be win-win, because the sustainable business is one where the business makes money and the traders make money and we're all successful together.
Yes. And that post that I shared yesterday that Matt shared on his X account about how we had over 700 traders move to live within this year so far, and then over 2 million was made from the live traders. So it's amazing. It's a legit prop firm, right? It's not just like, oh, we're going to sell you evals and we're going to take all that money. Plus
he's fun because we've officially challenged ICT to show us his skills. Matt did that, so there's a lot of fun here too. It's not all stuffy, and we're here for the fun.
Yeah, definitely. I mean,
I was trying to find that one the other day because I was going to be like, yeah, it's day number 40 and ICT still is too afraid to trade. But
oh gosh. I know. I think Matt said that he would get a tattoo on his forehead or something about.
Let's do it.
If ICT won the challenge, I don't even remember what the challenge was, but I just remember I'll tattoo your name on my forehead, something like that.
Did ICT respond back to him?
No.
He never responded.
Scared. I didn't see a response.
I feel like he did. I feel like he did at one point. Oh, so market's open.
Oh,
ding, ding, ding.
Ding, 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 ding. Okay.
There we go.
NQ is hovering right around VWAP.
What
Right
did
above it.
people in the chat are saying ICT did respond. What did he say?
Yeah,
I missed
don't
it if he
know.
responded.
Raphael said ICT is top 5 troll. Okay, NASDAQ is pushing off that VWAP. First minute is almost completed. Yeah, Methodical Man trades off the 15 sometimes, like how he was on our show and he shared his 15-minute trade, or not 15 minutes, but 15 seconds. So fast.
Yeah, that's not for me. I would do an automation to go that fast, but I don't need to be clicking that fast.
Yeah, it's so fast. Nick, I watched your most recent video on YouTube and it was so good. Like you were basically talking about all the different strategies that you've seen people make money using. And you're like, it doesn't matter what strategy you pick, but like you shared it with us, the common things that people who make money consistently do.
Yeah, no, it's patterns and habits, right? You know, not. I was basically just responding to like I said, I got my camera in my car, and I'm like, I'm just gonna make a video about this rather than just like typing this out and driving. I made a video about it, and then I was like sent to the individual, like, hey, this is the answer to your question, bro. So, yeah, it was basically just like building, solid habits and trying to. This was someone who was dealing with over trading and like looking at the charts all the time, back testing and like strategy hopping a little bit. Like it was just too much in his brain. I'm like, you just need to decompress. So I told him this whole week, don't trade. You can tape read if you want and just watch, but like you don't like just try not to trade for a whole week. Let's see how hard that is. I guarantee you that's way harder than taking trades and whatnot.
Yeah, and
It was
that
only 7 minutes long, so I mean, maybe if you guys want to go watch that video, it's the one from Tuesday or on Monday, I believe. So, yeah,
it's
And
good.
by the way, go ahead.
Oh yeah, I said it's really good because like part of his situation is that he was in a lot of debt or is in a lot of debt and looking for some guidance, and it's like when you're in that situation, the desperation makes you even do more emotional things, and good
Exactly.
trading. Yeah, it's very difficult, which in your video you're like, you have to get a job. And Barbie, you said the same thing in the past. You're like, gotta get a job. Like, don't try and do this full time without like some type of income while you're learning.
You muted, Barbie.
Oh, I thought my sound wasn't working. I was like, oh wait, what's going on?
My dogs are barking. I forgot about that. Yeah, I think people wonder that a lot. Like, am I ready to go full time? And I think if you're asking that, you're probably not. You need to be really comfortable in order to do that, because otherwise you're adding an extra layer of difficulty, and this is already something hard. So why are we making it harder?
Yeah. 10 Trading says should not be trading from a position of desperation.
Yeah.
Yeah.
It really makes it hard.
It looks like the ICT string was shared with us. What does it say? ICT says, I am the only one not being hawking paid demo accounts and retired, but outpacing all of you that talk your smack. I could be making millions by the week, and I choose to refrain. Offering me money when I have more than I know what to do with is stupid. Offer me a challenge, LOL. And Matt said, offer still stands. 40 million profit on demo account. Size 64 font. Size 64 font of ICT tattooed on my forehead. And
he's offering him to trade a demo account, his favorite.
And then he said, ICT said, would your firm sign a contract that states your firm would not deny me the winnings if left to run it up? Yeah. Oh my gosh, that's so funny.
I want to see it run up. I mean, this guy's been offered so many like free accounts and stuff, and he still won't trade them because he can't take the pressure. Let's face it, he can't take the pressure of trading with the show on.
The bottom part say there? He said, we are in contracting offer every 100,000 you make on road to 40 million. We'll give you 100 accounts to trade your choice. I want radio and TV spots in a bowl of green, only green.
M&M's is I think that's a Mariah Carey thing. Oh yeah. Like there's rumors that, some of these celebrities like request very specific things in their contracts.
Yeah, we
I know
all know about the Robbins Cup.
Marshawn Lynch. I know Marshawn Lynch like to have Skittles in his socks. He was a running back in football, by the way, if you guys don't know. So yeah, no, I didn't know he responded. That's hilarious. Yeah, hopefully he pops on here. You know, that'd be funny.
That would be fun.
Yeah, come on, bring it to the stream too.
I mean, I trade ICT concepts, but like all the drama stuff, I try not to get too involved in. But
nobody wants to be involved in that if they actually trade.
it
No.
definitely is funny. Like that whole conversation right there is pretty hilarious. I'm just here so I won't get fined. That's right.
Bags asked, what was the bounty? It is set at $1,000 or $1,000, 1,000 likes and 1,000 views for Burke's birthday. You guys, let's make
Yeah,
Burke
give Terry
today.
$1,000 and she'll do the giveaway.
Yeah, 1,000 views and 1,000 likes for the bounty. Okay, so market is pushing below VWAP. It's just hovering around unchanged.
I
feel like Barbie and ICT would
I want to trade us versus
along.
ICT. I think we should do that. Like,
I feel like y'all would
say
get
that
along,
I was
Barbie.
stalking his stops though in his paper account.
I would say I think I think whoever is running the futures, I think you guys would get along. Like after like a week or what, like if you come on stream, like I feel like y'all would get along.
Well, I am Enigma, so we have to.
Okay.
So
S&P
NQ,
at this low.
yeah.
Now I found that a little odd. Maybe I was just a little early to the party, which is fine.
For the long.
Yeah. I would be really mad if it reverses from here because this is like it bottom filled my stop. So
Dang
this would be
it.
great. This would be absolutely crazy. This would be absolutely
Although
crazy.
we haven't really gone anywhere yet, to be honest. I mean, the way I look at ES is like if we're hanging around 6,300, boring.
It just loves that level, 6,300.
It's very balanced there. It's a happy little boring spot. That's where the vanilla is. No toppings.
No toppings. The low of that first 5-minute candle in ES was 63.02.
Why I did that? I'm gonna check the 5-minute out real quick. ES looks way better. Even though I did get stopped out, ES looks way better. If we get strong displacement on NQ and start to really pump up, assuming ES would do the same, that may be the play. Because this SMT right here, inside of this hourly gap and 4-hour gap, is something I'm watching. What the chat say in terms of poll, like bullish or bearish?
Let's see. I can't see the poll right now.
I think majority of people were pretty bullish.
Yeah.
My thoughts on gold,
51%.
Wow. So that was 30% no bias. Oh, wow.
Ooh, interesting.
So only 19% were bearish. Okay. Yeah. Yeah, I agree with that. Gold, I don't know. Gold just you tell me. I think whoever tells you what's going to happen here next is lying. I don't know.
I mean, it's in a downtrend right now, but it's it's like downtrend, uptrend. It's chopping around, kind of like the indexes too. You know which one was kind of catching my eye a little bit was crude.
Oil, yeah.
Yeah, I had these levels are kind of faint, but so we were putting in a little bit of an ugly upside down head and shoulders on the crude hourly too. We'll see. So the way crude moves, it likes to consolidate and then make a big move. And so it's in that consolidation. I've been watching it to see if we're going to make a big move out of there. I know Trump wants it higher. So that's why I'm always watching to see if he's going to say something about crude. But
yeah. Do we have inventories on that at 10:30?
I thought that was yesterday. Was
yesterday. Yeah, I think it's usually on Wednesdays. Corey,
that's what I was just double checking.
Good morning.
Sometimes it gets pushed.
Oh, good morning. Vala Trades is in the house too. Corey, the phone trader, said gold is like the bad child that don't want to act right. Hey, gold, sit down somewhere.
I'll tell you what, I feel like oil looks pretty good for a short right now.
Yeah.
Just swept these highs right here. I don't know why. I think it's like a new layout I'm trying out here. Swept all these highs inside this gap and moving very nicely away from it. 15-minute. This doesn't look bad. Doesn't look bad at all. I don't like how the past couple 15-minute candles haven't really made a move, but we're still inside that 10, like before 10 o'clock, the open range. So yeah, no, this doesn't look too bad. Oil shorts in here. This 4-hour wick definitely looks a little sketchy. For who was asking about that. Anything else you guys want me to check out? Gold. I really don't want to talk about gold anymore. Oh my god.
You can check out my banana.
This sucks so bad. Like my top was right here. It's 63.02, and the low of this candle is 63.02.
Oh man. Ugh. That's not a good feeling.
Rude market.
So rude. How's the VIX looking, Barbie?
Just hanging around 17, not doing anything too interesting. So that's very balanced, boring market again. And last week we thought this was going to be a more exciting week. This is why you can't judge a day by its red folder news sometimes too.
Yeah.
Here we go. Go, go, go.
I'm going to put in a buy stop above that first 5-minute bar to get tagged in on the long side. I think it's going to tag me in.
I forgot I wasn't sharing stuff. Did that share? Shit. I don't have my ninja chart set up. I'm going to fix that real quick.
Okay.
RIP, brother, part of the game. Yeah, definitely part of the game.
Yeah.
I could have actually, I think I was just, my stop technically in terms of how I do technicals should have been a quarter point below it. But I just wasn't paying too much attention to it and didn't think it'd make that much of a difference. But that blows. That hurts, honestly. But the good thing is NQ is starting to catch up. So maybe if we close above here and inverse on the 15-minute, I'll look to go long there. So if, like, for example, if I wanted to take an inverse here, I still have enough room on the table to reach this target. So I'm not too worried about it. Whereas, like, if, let's say, I was longing the weaker pair, like if it was ES, and this was my last chance to catch up, I'd be more mad. But this, with this, I still have NQ, so I'm not too worried about it. I would have much rather been long on ES, though, because I think ES longs are way better.
Yeah.
The trade that I was trying to show, I had grabbed some ES and I got my trim off, so now I'm trailing the runners. I went ahead and put one up by the highs, so we'll see. Since I got I don't know, I got my trim on, so I was just gonna watch this and see if we get the break.
All right, we are in some longs.
That's that kind of spot that I was kind of looking for, this dip down here, and it didn't get all the way down to 6,300. But when I saw this wick and then heading back up, where did I get my entry? 6209. Yeah, it wasn't great. It was when we were coming back up out of this bounce. I was a little bit late on it, but because I had the wrong account pulled up.
Dang it.
There's not enough coffee in the mornings, I swear. We were talking about that before we came on here, like more caffeine.
More caffeine.
Is that just us, or is that chat too? Like, do you need the IV drip in the morning to get this stuff going?
Oh my gosh, an IV caffeine drip? That sounds amazing, Barbie. Let's go. So we're getting closer to the bounty. 1,000 likes, 1,000 views to celebrate Burke's birthday. Let's push it, you guys. Let's make
this is my coffee.
Let's make his morning the best birthday morning yet. So birthdays are so fun because you can, wherever you go, I mean, not wherever, but a lot of places will give you a free dessert if it's your birthday, which is fun. Like, you know, you have to tell them. Some places you
get free meal at Texas Roadhouse. I don't know if y'all ever had Texas Roadhouse, but pretty good. Pretty solid.
That sounds good. Is barbecue Texas Roadhouse? They're known
No,
for
it's like a
barbecue?
little steakhouse. It's kind of like Outback and Longhorns. It's just better. Oh, dude, MyFundedFutures. That's Luke, right? So
Well, it depends.
Okay. So, anyways, yeah, it is so good. Yeah. Whoever is running that, they know. What's the box? Huh? What's in the box?
In what box? My box? I don't think we're allowed to talk about that.
Maybe the box on your screen, maybe the little, like the long.
This thing here. If this is the box, this is my orb tool. I was just flipping over to get that orb trade onto. I have 2 trades going right now. So this one's the NASDAQ orb. So I was like, I see how natural it is for me to put these on. I don't even realize I'm doing it. Here's the ES trade I was showing y'all. And then I was throwing the NASDAQ orb on this chart.
We're so close, guys. Oh, we got it. Awesome job, guys. We hit the bounty. Happy birthday, Burke. I so want to sing, but I'll
You gotta save your voice for our intro song.
Yes, exactly. We did it. Let's go. Let's go, guys. This is a good morning. I love this. I wish it was your birthday every day, Burke.
I don't want to turn 30 every day, Terry. Hey, chat. Hey, Nick. Hey, Bobby. How's it going, guys?
Happy birthday.
Happy birthday. Yeah, thank you. I'm turning 30 today, getting into the old man zone territory.
Welcome.
No.
I'm not there yet.
That way.
27. I'll be 28 in November.
Okay. Hopefully we'll celebrate yours on the stream as well, Nick.
Yeah, let's do it. I don't know what day it falls on, but we can.
They're calling you Unc.
Unc?
Like Uncle Burke.
Oh, yeah, it's on Thursday. So, yeah, we'll be good.
Nice. Okay. So here's what, guys. I wanted to do something special for y'all just because it's my birthday. I like to give presents on my birthdays. So here's what. In 5 minutes in time, I'm going to drop a code, and this is going to be for accounts. And the number of accounts I'm going to give is going to be slightly higher than usual. So get ready. I'm going to drop it in 5 minutes, guys, and make sure to share the stream, like the stream. We're showing up every day, showing love, and we want you to enjoy the show in return.
This is so exciting. So some free accounts. Will it be Neo asked the 50K starter plus?
I'm not telling you that. I'm just telling you it's going to be accounts. So stay on that page. It's a little hint, but I don't want to lay it all out because it's a surprise. It's a gift at the end of the day, right? But again, I'm giving away more accounts than usual today. Ooh. So stay tuned all the way to the end of the show.
So chat gets gifts for your birthday. Good deal.
In the meantime, though, Barbie, I have a special request for you. Could you take a look at PayPal for me?
There's 3
of us.
I'm
genuinely curious about your thoughts on PayPal.
Oops, that's the wrong chart. Okay. I was like, what, did you send me some PayPal?
I know. This is exciting.
Well, yeah, there. I'll put this guy. Well, y'all see the trade. It's going. Yeah, PayPal's been a party, huh? It's breaking out of a trend line. So I love a trend line break.
It's looking good.
Is that it's going for the gap fill, huh?
It could be. So yeah, I'll mark that one out too. We've got a gap up here. Come on, magnet. There it is. The fill is way up here. Come on, magnet thing. Up
that
there.
It's looking like a nice long.
That does look pretty sweet.
Do you buy stocks at all, Barbie?
Yeah, I buy stocks, but a lot of times I will play options on them.
Okay, like
so that's what I was like literally typing that into my option chain right now. I was going to see what's going on those. So what I usually do is go look at the monthlies first because that's where the big guys are hanging out. So let me see. Yeah, there's a lot on the.
So before you buy a monthly options contract, what time frame is your go-to for technical analysis?
Well, I'd really just eyeball the chart, and I think how many, if this is the hourly, I think, you know, how much space would this need? So, like if it's going to make, whoops, I keep thinking I have a tool selected and I don't. If it makes kind of a slow move up like this and this takes a while, like I would look at this, like if this is how much a day is that 1, 2, 3, 4, I need to have at least a week on that. But I usually go look at the monthlies anyway, because that's where the smart money is usually hanging out a little bit. But I did notice on the August, there's a lot of in the money calls. So somebody knew, but let's see, where was it? The 70 calls. There's a ton of interest on the 70 calls and then the 80 calls too. So they're kind of looking at the whole numbers. So somebody, these are always in the money. So somebody bought in the money calls on PayPal.
Are you looking at the dark pool or?
I'm not looking. I mean, okay, I'm trying to build a custom scanner for this, but I haven't yet. But I'm looking at similar information to what like unusual whales and stuff looks for, where I'm just literally looking at what contracts have a lot of open interest and volume on them, because those are the ones I want to pay attention to. I've done really good with that. There's things I've bought that are random. The one that's been kind of the running joke this year is I bought EEM leaps. I had no idea what EEM was, but I saw all of a sudden there were like 40,000 people buying calls on something that had no volume on it. And so that's what kind of gets my interest. And then if I see something interesting like PayPal, I'll go pull up the option chain and see where I think that the bigger players are, because that's where I feel safer. And that usually works out for me.
Okay, that is interesting, actually. I see you're counting candles. Kind of.
Yeah, I mean, I do that when I'm doing my SPY swings too. When I'm doing this, if I come down and buy the 21 EMA, I'm going to kind of guess how many candles it would take to get up here and make sure I have at least that. I usually like wiggle room, because I've been in that situation enough times where I'm in the right play, but I'm in the wrong date. And so it doesn't make that move until right after expiration or something like that, because you start losing a lot of value in the final days right before expiration. And I don't want to deal with that in my trade. So I try to give it always a little bit of time buffer when I'm messing with options.
Okay, that makes sense. I always wondered how people get around with the time decay, actually. But counting candles is actually smart.
Well, that's why, yeah, we were talking a little bit about the option stuff yesterday. Like I have some custom tools that I want to build, because that happens a lot where there's just, we don't have some of these complex scanners, and then you have to rely on things like unusual whales. But that's not what the big players are doing. We were talking about Bloomberg terminals the other day. That's some of the information you can get in that is like where this more complicated flow is. That's really specific to what you're looking for. And if the tools are really, really great, I feel like those people tend to not share it. They're sharing more of the generic tools. So that's why I always end up falling back and trying to build these things.
Smart. I'm not gonna lie. I love it. Cool. Your trade looks like, oh, what's going on? I think I forgot my window. Hold on, guys. One sec. Something's going on. What's happening? Harvey, is it you? Is it you or is it me? Hold on. I just moved to Texas, guys, so I'm not used to coming outside.
It's sounding pretty Texas over there.
I know, right?
Our longs are looking good, Barbie.
I like it.
Boom! 50K Start Plus account chat. Use code to the moon 50. Let's go.
It's almost like these jams are like the perfect time to look at the screen.
That's funny.
To the moon 50.
I'm gonna check if it's gone. Wow, it's gone already. Chat, you guys are fast, actually.
So fast. Let us know if you got one. Jan got one.
How do you like sound?
And you're doing these throughout the day, right?
Yes. I think this song requires us to put the hats.
Yeah.
Just to get into the vibes.
I think it requires one of those cowboy hats on the back. Yeah. Oh, there we go.
Yes.
Sweet.
I had to get my sparkly one.
Sparkly. I love it. I love that one, actually.
What are you gonna do for your birthday, Burke?
Work.
Yeah.
Trying to make MyFundedFutures better every day, 1% at a time.
It's kind of like my birthdays.
Yeah. and I'm not a huge birthday guy, so it's not a unique day for me. It's just a business as usual type of thing.
Yeah.
But today's
Party later.
special because chat and our viewers and listeners pushed it to 1,000 for you so
Let's
quickly.
go, chat. You're the best. I love you guys.
You guys are the best. Absolute best. You guys get us up every morning and get us so excited to come here and show you our trades and entertain you and chat you up. What is the market up to now?
We hit those overnight highs on NASDAQ, and I'll take this chart off for a second. I'll show you what I'm talking about. Over here, we tagged that overnight high. So I see us getting a reaction off of NASDAQ. ES passed it earlier. We did slow down there, but on that same candle on ES, but we're finally getting a little bit of something off of NASDAQ. I did go ahead and trail the orb trade because it was time, and I'm glad that it was time because we're right at that swing high, and I want to get that protected. And I think one of these, trailed out both my runners. So ES trade is over. The trail hit. So
nice. I am going to exit out of my orb, I think. It's up about $270, $280. I'm going to book some profits. Close it out about $260.
Good stuff.
Thank you. I think in this market environment, I just have to be fast about like booking profits because
yeah,
things can just change so quickly.
That's something you don't want to do.
The reason I'm not on the orb. Yeah, the reason I'm not on the orb trade is just because we have the stats on it, and it's also nice when I already have the profit booked on ES that I can then just let the NASDAQ one chill.
Yeah, so I actually got long, like right when Burke was singing. So I got long here off this IFEG set up right here. Basically just for starter position to get in, stop below here. If you guys look at this hourly candle on NASDAQ and the 4 hour, this looks like, it's probably going to push higher. People that were looking for shorts, I'm sorry, I didn't see it. It just something that I couldn't see a short. I just couldn't see it unless we got below here, which we didn't. I did get stopped out a little early on this ES trade. That was mainly my fault. I just was not paying attention. My stop should have been like below this low right here, because this is like the impulse low to impulse high, and that would have saved me. That would have saved me by a quarter tick, which is not really that big of a deal most days, but today it definitely was. And this was the stronger pair. This was the weaker pair. So that's why I wasn't too worried. I wasn't trying to get back on ES or rush myself in. So as soon as we got above this, as soon as I got confirmation here, that's when I answered back in and made it equal highs just now. So maybe we get like a little return back here, scare some people out, and then go higher. But higher is really the only thing I'm looking at. The oil, let me see if that oil. Yeah, oil hasn't done anything either. But yeah, no, I'm looking for the people that had a question while, like I said, Burke was singing. So yeah.
The oil trade, I think, is kind of a get in and wait situation. It usually is.
Mm-hmm. Yeah, I feel like oil
is fast when it actually hits, but you have to wait for that hit.
Exactly. So like you'll get in like around commodities open like 9, and the chart looks clean, and from 9 to 10:15 doesn't do anything, and then all of a sudden it's 1 or 2 15-minute candles that just explode and either hit TP or stop loss, and it can really wear you out. Whereas NASDAQ and ES kind of move quicker most times.
I'm going to ask this individually to all of you. What was the first ticker you've traded on the future side?
MNQ, I think, yeah.
Okay.
Oh,
I thought you were trying to make me think way back what the first thing I traded was, but
no. Do you remember that? I don't remember mine.
Oh, for me, it was Bed Bath and
mine.
Beyond. For me, it was Bed Bath and Beyond. I still have the screenshot, and it was like November 2021. It was like a huge stock split or something, and I bought the position on Monday. I think it was like a Friday or something. And within overnight or a couple days, it was up pretty fat. And like, yeah, that was one of the first things I ever traded. That's why I got hooked, because it made so much money. I'm like, oh my God, I can do this full time. And only
Yeah.
up from here, right?
Did you lock profits though on that? Or did you
I
just
did.
let it
Here,
go?
I'll have
Nice.
a screenshot. I'll find a screenshot.
That is the
But,
curse of
I
a new
gave back some
trader,
of those
like forgetting to
profits.
take profits.
Yeah, I gave back some of those profits on other trades, trying to do it again and again and again.
Yeah.
But dang, I have so many. Oh yeah, here. Bed Bath & Beyond.
That's why I'm
no.
always telling the chat in my Discord chat too that realized gains are the sexy ones. Show me the realized gains.
I don't know if y'all can see it. It was like Bed Bath & Beyond, November 2021, 30K. It was I didn't even have
30K?
options on it. I didn't have options on it, which was crazy. If I just would have had like I don't know, $2,000 worth of calls or something, and I didn't even know what it was really at that time, it would have freaking printed. I mean, I don't know. I'd probably still be here though. You know what I mean? I'd still be here.
Probably.
Yeah.
You
I wouldn't want it any other way.
What about you, Barbie Terry?
Mine was Weight Watchers. Oprah was it. I saw the news late, like I don't know, maybe months later, that she bought a big stake in it, like a 10% stake or something in Weight Watchers. And at the time, she was the first female self-made billionaire. So I'm like, she must know something. So I bought a bunch of stock. I mean, a bunch for me, right? Like it felt like a lot. And then it did make money. And I was like, oh my God, this is so easy.
Right. Yeah.
It always feels easy at first, doesn't it? And then doing it every day, that gets a little tricky.
I think if we would have lost money, you and I, Terry, at first, I don't think it would have been. We would have been so we would have been, oh yeah, scam, and then just ran away.
Yeah.
But then the first trade was a banger. I hate to cut you off. I do have to bounce here, but for this trade, you could go for me in any way. You could go. You could go break even right around 2R or full profit 2R. We are like 1-to-1 right now, so you could go break even if you want to. This is very good displacement. This is something that I like to see. Unfortunately, I got stopped out a little early here, but I gave myself room to get long again. So happy birthday, Burke. I'll see you guys back here.
Thank you, my friend. Chat, drop W's for Nick. Take it easy, man.
Yeah,
Bye,
take it
Nick.
easy.
We'll see you tomorrow.
All right.
Yeah, so I didn't tell you what the first stock I bought, because I actually really remember this. My dad had gotten frustrated with this little account that he had, and he ended up just like, here, you figure out how to make money out of this. And he told me you should probably buy Cisco, and he was talking about Cisco Internet, but this was like right after it had just made a massive move. So I think I did buy a little bit of it, but I was like, that seems silly to buy it like when it's expensive. But then because I had searched for Cisco, I didn't know how to spell it. I'm not very good at spelling, but Cisco Foods had come up, SYY. And I was looking at that one and I was like, well, this one looks like it's a pretty good deal. It just always goes up. And so I bought that one, and then I just held it for like 10 years, and it split and became a whole bunch. And it was it was definitely a get rich slow one, but I held it forever. And then I teased my dad forever about how much more my Cisco Foods went up than his Cisco Internet.
Was that like a big motivator as far as like holding it, like, oh yeah, it's winning, it's making more and more money? It's like, Dad, look.
It was really more like it was a smaller account, so it wasn't going to make that big of a difference if I sold it. And I knew I had time on my side, so I was just that's my strategy was more, I'm going to buy the blue chips until I figure out what's going on. And then I ended up in a whole other career and then coming back to this later, but I still had that SYY actually.
I love that story.
Okay. Did you lock in the profits by any chance?
I did finally. I was like, what? That's had a good run. I think we're done here. And I'd been holding some Home Depot from like $30, and I didn't even know, because I hadn't checked that account in so long, that Home Depot was like almost 400. So I sold that one too.
Holy smokes. Yeah, a friend of mine said, set it, forget it. Like when I was learning about stocks, she's like, just set it and then forget about it. Forget it's even there.
Yeah.
I can't do that. You know what, Terry? I have to wake up every morning and check my portfolio, see how it's doing. I'm
Right.
that type of guy. But what about features, Barbie? Like, what was the first ticker you placed a trade on?
Well, it was ES because I was an absolute SPX hoe at the time. I was trading 0 DTEs like nobody's business on SPX. But this was like, so I started trading options, during COVID when everything was really exciting. And then we went through this spell where interest rates were kind of getting under control and everything was kind of getting under control. And so then like theta was really coming in and killing my trades, and I couldn't sit there and hold anything. So I was getting really frustrated because I had the right idea, but I wasn't timing it right. And it's like, well, if I was able to just sit in this trade longer, it would have worked. And so that's why I started messing with futures. And I started just paper trading it next to my options trades just to kind of see what the difference was. And then I was kind of like, this is interesting. And I threw some money into a little futures brokerage, and that the first few months were a little interesting because I would double the account and then half the account and double the account and half the account, but eventually it started working out.
We have a similar background, actually. I started with options as well. My forte was SPY or SPX, 0 DT, or maybe daily sometimes. And I was so tired of not being able to time the market. So I was looking for alternatives, and I found features. And I was trading my own account at the time. And little did I know, so like yourself, I was up and down, up and down, up and down. And then all of a sudden, like 2 weeks, 3 weeks later, I got the margin call.
Oops.
I'm like,
Oops.
I didn't even know what margin call is at the time. I'm like, do I owe you guys anything?
Yeah. Like, what is this? What does it mean?
Yeah, it was funny. But my first ticker was ES. So I started trading ES or MES. And 2 or 3 years ago, I switched to NASDAQ. And oh boy, that's something. Like NASDAQ is, especially after ES. So every now and then nowadays, I place trades on ES or MES. I feel like I'm driving a car at 5 miles per hour after NASDAQ versus NASDAQ is the Lamborghini,
Yeah.
I can't stand it anymore. But
Did you just say I can't stand it anymore?
I can't stand trading ES.
Oh, yeah.
He's over the S&P. S&P is no longer baby.
Yeah, it's not. I would trade, like, instead of trading ES, I would probably take an options call on SPY or SPX if I really want that, adrenaline rush or dopamine.
Yeah. What are some of your setups, Burke? Like, what do you like to trade? What do you look for?
Wow, it's been a while. I haven't placed a trade actually. I like to use 15-minute time frame and find my entries. Okay, so 15-minute time frame is my targets. That's where I get the targets, and the entries are always on the 1 minute because I'm a tight stop loss kind of trader. So my stop loss is typically not more than 15 points, I would say, on NASDAQ, which is really tight, especially in this market, but it's what it is,
So tight.
It is, yeah. And my first stock was probably GME. I bought it at like $200.
You bought a GME at 20?
200 or something like that. Something stupid.
Man.
Yeah. I actually, my first stock was Tesla. I'm lying. It was Tesla. I didn't know what I was doing. There was this app I was testing, and I bought a bunch of Tesla, and I couldn't sell. I'm like, this is stupid. Why? Like, it's my
That's
money.
what happened to my first option. Is like I got into an option, then I couldn't get out of it, and I didn't understand why. So I just ate that.
Same. I probably still have the equity in that account. And then I switched to Reddit things and GME, AMC, and all that. Didn't make any money on those though.
That was so wild when that was the GME major bull run on it. I just remember waking up and on CNBC, they were talking about like how it could potentially make all the markets go down because of how high it was going. And they were worried about funds getting liquidated and it affecting the rest of the market. Like I woke up and the market was down, I don't know, like a few percent already in pre-market. It was like news all over. It was wild.
what do they call it? Is it like FUD? I think what it's called. Like the news, the media is trying to just like unleash.
Yeah, that's what I was
fear.
going to say. Like the
It's called
media
FUD,
got
right?
involved in the politics.
I'm a 30-year-old guy now. I don't remember those lingos and slangs.
I think
all that. It's FUD.
I think it's fear, uncertainty. Oh, what does the D stand for?
Fear, uncertain, doubt. Yes.
Doubt.
Thank
Yes,
you, Alex.
FUD.
But that was literally the play on, like, they were trying to just squeeze the hell out of it. Like, that was literally the game.
Yeah. I wonder where's GME at nowadays.
I was just looking. It's at like 23. So
23.
hopefully you're not
It's at
still holding
20.
that bag.
Dang.
It pulled back all the way up from what, 400, I think, as far as I remember.
So wild. When we had all these celebrities also trading, like Mark Cuban was saying, I'm going to buy some, like GME. It was like, is it just going to come crashing down now? Like everyone
That's one of those, buy the rumor, sell the news. Mark Cuban's talking about it. It's done.
Yeah. Have you guys watched the GME movies on Netflix?
Yeah, those are good ones.
Good one. So your 15-minute orb is still printing money, still in the green, and you moved
Well,
it
it hasn't printed anything yet because I haven't taken any profits and it's heading back towards break even, but we'll see.
Dang it.
Give it a chance.
Yeah, let's see what will happen.
That's what I was talking about earlier. Like I will fuss at the crew to stop showing me unrealized gain screenshots. Like that's not hot. It's hot realized gains. I don't have realized gains on that one yet, but I got some on ES, so I'm cool. I'll just let it do its thing.
Booked profits. Booking profits is hot.
Yeah.
So everyone,
we've all seen where we're making, twice what we normally make, and then it goes back down to nothing. We don't get to keep any of it.
Oh yeah, round tripping. I feel like everyone's experienced that. Have you experienced that, Burke? Like a round trip, like where you're in massive profits and then it comes all the way around?
Oh, hell yeah. Oh, yeah. Because so when I trade, I like to move my stop loss to break even as fast as possible. And it has, it has its flaws. Sometimes you're faster than you should, but I like to lock in profits or at least have my trades risk-free, right? There was this trade. I was trading, I think, NASDAQ, like with 3 contracts or something. And I was up like huge. I was up huge, but it didn't hit my TP. And I'm like, all right, I'm going to just set my stop at break even. I'm going to let it go. And I'm not even going to watch this trade up after that point. I didn't. And the market reversed throughout the rest of the session. But here's the thing: if you're a trader, if you want to become a trader, you gotta be numb to those things. Like you should like remove yourself from being attached to the P&L. Mm-hmm. Otherwise, you'll lose your mind. Oh,
right. Like, because losing is just part of the game. Exactly. All the time.
Like, just follow your plan, stick to it, and let it go.
Yeah. Yeah. So Pine Tree Trader says that's why MyFundedFutures is GOAT, because it's end of day drawdown. So if that happens to you where it profits, it runs, and then you move your stop to break even, like it's not going to hurt you. Some firms, it's intraday trailing.
I'm pretty over the intraday trailing. I'm pretty over it. It's too hard.
Yeah.
It's not realistic.
It's not realistic at all. Yeah.
No.
On that note, though, we're actually we'll be making changes soon at MyFundedFutures. Like we're gonna be, I don't know the exact specs, but something big is coming up, guys. I can tell you that because the team is working really hard to make magic happen. Just stay tuned.
This is so exciting. Soon, I'm hearing you say, Burke, some exciting changes.
Soon, yes. I'm not sure about the exact timeline, but I know that it's happening soon because we've been working behind the scenes 24/7 almost to make things better for y'all.
Yeah.
And it's coming. It is coming.
Well, in the prop firm business, it's not just a matter of being the best. You have to stay the best too, because there's a lot of changes frequently.
Yeah.
So
Mhm.
And guess
I know
what,
y'all
chat?
are on top of it.
No, yeah, 100%. And guess what, chat? If you haven't turned on your notifications, turn it on, because we're going to be announcing the changes or the new. It's not changes actually. It's just we're going to be having new stuff, I believe, and we're going to be announcing it on MyFundedTV. So turn on the notifications. Luke also likes to show up sometimes. He posts special discounts, special promotions in video format. So if you wanna, if you wanna be on top of your game, just go for it. And social media giveaway. I haven't forgotten, you guys. Make sure to share the stream on Twitter, Instagram. Tag us. I'll be watching, monitoring the tags after the stream and giving away 20 accounts to y'all. But I have one special request though. When you share the stream, okay, on Twitter especially, tell us why you love MyFundedFutures or why you like to watch us every day on YouTube. I want to hear your thoughts. I don't want to see people just like retweeting. I want to hear your thoughts.
I think it's the banana.
Might be the case, yeah. Might be the case. Barbie, I heard you were talking about having a dog named Banana.
Yeah.
Are you planning on getting a golden?
Should it be a golden?
I think it should, because it would be a
I've never
perfect
had a
match.
golden.
There you go.
What
Labrador.
about a Labradoodle or a Labrador?
Labrador.
Are those yeah. Well,
Cute. Oh gosh, so cute. Burke, the social media giveaway will you be picking people at the end of our segment or the end of the day?
Yes.
Our segment.
I'm gonna be choosing. I DM the winners myself. By the way, guys, I do it after the stream. So make sure you're looking or your notifications are on or anything or something like that, because I DM. And some of you folks have actually you need to turn on your DMs as well. Sometimes I can't DM you on Twitter, especially. So make sure your DMs are on. And tag us. Tag Barbie, tag Terry, Nick, all the cast. Tag me if you want. Tag MyFundedFutures, MyFundedTV.
20 free accounts. I didn't realize it was at the end of our segment. I thought it was like end of day. Yeah.
It is EOD. It is EOD. Let me clarify that. It's going to be EOD. So you'll have enough time to join the social media giveaway throughout this whole 4.5 hour episode.
Yes. And have time to post it.
Yes. So guys, what do you think? Is it another giveaway time? Should I set something up? Should I cook? Because I feel like a little hungry. I'm getting hungry. I haven't had breakfast.
Yes, absolutely. It is your birthday. I feel like we should be cooking for you.
Oh no.
breakfast for birthday.
Breakfast. That's funny. Chat, what do you think?
J Buzz says cook it
Giveaway
up.
time?
Yeah, let's cook, Raphael says.
All right, drop a yes if you want to give away right now.
I want one. Capital yes. Let's see it.
Yes,
Terry is
yes,
for the
yes,
giveaways.
Yes. Always.
I like the yes chef.
Yes, chef. I love that.
You're our James Beard Award chef, Burke.
That's funny. You guys a good cook? I think Barbie is a good cook. Terry, what about you?
Yeah, I'm a good cook.
Barbie, you hesitated a little bit.
I don't want to be. I like making other people make my food for me.
Okay. I hear you.
I've spent a lot of years cooking. That's part of the problem. Is like it becomes a chore when you've got little kids and you have to like basically prepare 3 meals plus 2 snacks. It wears you out.
Yeah.
And you're like, somebody cook for me now for a change. I'm there. I'm not
It's
gonna
a
lie.
job. It's a lot. On top of everything else that you're doing. Yeah, it's a lot. And food tastes better when someone else makes it for us, I feel like.
That's facts. Especially when it's something that takes a lot of preparation. Even if it's just a salad, like there's a lot of things you have to do. It always tastes better when someone else does it.
I would actually argue with that. If it's something that I know I nail it, I don't like it.
Well, there you go. Yeah.
You don't if someone else makes it for you?
Yeah, like for example, I'm not a huge bacon fan, but I like the way I cook it when I eat it. So whenever I go out for breakfast or anything, I try to avoid it because they burn it. I like it a little less cooked, if that makes sense.
Not
So-
burnt, crispy, but not burnt.
Not even crispy, actually. I mean, yeah, partially crispy, 50%, I would say, or 5 out of 10.
5 out of 10.
Yeah, but that's just me. All right. Let's see. There is. Okay, I can't read your name.
Who?
So there's the top 1 fan.
Oh,
I can't read your name.
Rocky Mountain Trader.
Rocky Mountain Trader. He says, no, save the giveaways for another time, for another day. So I guess I'll just go with this decision. I'm gonna let you lead the show because you're the top 1 fan. No, I'm just kidding, guys. I'm just a cook. I'm just gonna cook right now.
Okay. Oh my God. Cooking means some type of giveaway. Let's go, Burke. Burke, you're so like amazing on your birthday, giving gifts to everyone else.
I'm showing gratitude to y'all.
So awesome. Gratitude Thursday.
Yeah, that flows right off the tongue.
Gratitude Thursday. Yeah, we were trying to think of good names for the days of the week yesterday. Magnus says, haha, chat, he got you. I do hear the skillet, like the typing. Burke is cooking up something special.
All right, let me mute myself actually, because the keyboard sound is sometimes annoying. Let me
It's not
cook
bad.
this and I just
It's not like mine where it's like blap 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 blap. I always do that. Sorry.
Yeah, no, all good. I don't even hear yours, to be honest. It's just that I just moved into my new apartment and I don't even know where my mic is. So.
Oh, I like that. Mr. Smith says, Thankful Thursday. Thankful Thursday for our gratitude Thursday. So using gratitude is a great way to like help with days where you feel super emotional, and if you're having a bad day in the markets, like to try and remember the good things that you feel grateful for, right? And all the wonderful things that is happening in your life that it's so easy to forget when things aren't going our way. Like sometimes it could be super basic, like just think about like today I can see, I am able to walk around and I'm able to like move. Some people they can't, right? Like they're sick. So yes, Thankful Thursday. I love it.
You know what I've realized, Terry? I think we tend to lose the sense of reality in a way as human beings. So when I first moved to LA, I had this big dream, getting into Hollywood and all that kind of stuff. But after moving in, like after I would say like 2 or 3 years, it became a normal thing. And I was actually in the middle of my dream, right? But you lose that thought, you lose your dreams in your mind. You got to remind yourself that you're actually in there right now. So that will allow you to feel grateful. That will give you purpose. That will give you joy. You know what I'm saying? Because I always wanted to be at Warner Brothers a lot. When I was there for the first time, I'm like, okay, whatever. It was business as usual because I lacked that sense of whatever you call it. So you got to remind yourself day-to-day basis if necessary to just like, it'll help you move forward or push forward.
I love that. It's so easy to lose perspective on where you are. Like we just get used to it, our certain circumstances, and then we forget like, wow, I'm actually doing it. So for all the traders out there, it's like we're doing it. This is the dream. I
Same goes for day trading actually, because when you first start, your goal is or your dream is not to breach the accounts or blow the accounts, right? But you do it after like account after account after account. But there is this breaking point. You just become profitable, right? Whether that means you take $500 out of the market or $5,000 out of the market, doesn't even matter. But at some point, you lose that perspective, and when you get when you make 5 figures from trading, or low 5, mid 5, 6, high 5 figures, doesn't matter. Once you lose that perspective, you feel numb
Mm-hmm.
taking payouts, and that is very dangerous in my opinion, because you might get depressed and that'll affect your trading.
Mm-hmm.
So you got to keep reminding yourself the hard times, if that makes sense.
I think we forget what our whole purpose for trading was in the first place, because I get that a lot. I get emails all the time and like weird comments like, you don't trade enough, you don't sit in front of the computer enough. And it's like, well, my whole goal in learning to do this was to not sit in front of the computer all day.
Mm-hmm.
So
Yep.
that's something that I have to think of too. Is like, yeah, I don't want to actually be trading all day. I want to, put all my efforts where it's going to make the most difference, so that I can meet my goal, which is, spending more time doing other things.
100%.
Mm-hmm.
Where's your how's your trade going, by the way? It feels like
The NASDAQ one stopped out at break even.
she's still
Boring.
bay though. She's still bay.
NQ is bay. It is. NQ is so wild. It's like people I always see on X like, why am I trading NQ? It's because we love the wild. It's fast. It's a lot faster than ES, it seems like. But yeah, sometimes ES seems
well,
like
ES hasn't made that move either. If we had played the ES orbit, it would be in drawdown right now. So
Burke, will you get birthday cake today?
No.
No?
No. I don't eat sweets, Terry. I'm not good with sweets.
Oh, I like sweets.
Yeah,
I'll eat some cake for you.
Go for it. Just send me a picture though, if you will. That would make me happy.
Thomas said we should sing happy birthday to you.
No.
Oh, I mean,
Sorry,
Barbie,
Thomas.
by the way, I feel like you're a banana chocolate type of gal. Is that accurate?
I don't know where the banana thing came from, but I like all sweet. I'm one that tends to have a candy stash, and I like to keep a variety. So
There's like different types of candies. There's like the chewy candy, like the gummies. There's the sour candies.
Yeah, I keep a lot of gummies around. I keep a lot of chocolates around. You never know what you need. I don't know. It keeps me going. It's the little things, but that's something that I can have to myself. Like I've got, I share everything with my kids and everything except for my candy stash. So that's mine.
Do you have to hide it from your kids?
I don't hide it, but there's a special spot. Well, I have it in a bin. It was originally labeled spicy things, but at a point they got smart to that. So, but they know you don't touch the spicy things bin. That's my candy stash.
Yeah.
All right, guys.
I do have banana candy. That's a thing.
Banana candy. I'm just
banana candy.
Okay. The problem is my imagination is actually pretty vivid. So when you tell me those things, I'm actually imagining it in my mind and trying to understand how it looks like, which is actually scary sometimes, because for obvious reasons. So anyway, so chat, I actually wanna tell you something. Eventually on the show, MyFundedTV, I want to have a competition among our traders, Barbie, Terry, even maybe myself as well, or maybe Fabio, like all together competing.
I think it would be fun if we brought some behind the scenes in there too.
Yeah.
Oh yeah, for sure. Throughout a week, I would say it'll probably be a week long. But here's what I'm curious about, chat. Who do you think would win? Include me and Fabio in this equation. My bet is. Okay, this is actually a tough question. I actually have high confidence in Barbie because she's a quant.
Yeah.
But at the same time, I know myself.
Y'all trade more aggressively than I do. So I think it depends on if you blow the account or win. I think that's going to be the thing. Do you blow your account?
Well, yeah, my drawdown is usually minus 10,000, and then I'm just kidding, obviously. No, my risk tolerance is not that high, but I like to trade multiple contracts just because I like to pay myself. Like if I'm long, for example, if I was you in that trade, I would take at least one contract at that high and then set my stop loss at BE and just let it go. That's how I personally trade.
That's how I was trading the ES one, but then the NASDAQ one was a systematic, so I just let it go.
I think it depends on the market conditions that we get that week. Like whenever we
It
have
does.
that
It
week.
depends. That's what I've noticed with the arena competitions. It's like that first one. Well, I didn't trade the whole week just because I was busy, but you have to hit the right things right really aggressively to get ahead, and then you have to try. Then the game is like to hold that, and so that's kind of part of the thing. Is like the trading competitions are a little bit different than just normal trading. It's about putting on those big aggressive moves. So I've been curious about that too. Like I know Matt puts on a lot of size, so he might be really comfortable in that. And I think Terry's comfortable with a lot of size, and I'm more methodical. So that's like a big challenge. That's when I enter a competition, that's part of my challenge is to trade more aggressively and go bigger.
All I hear is excuse. I'm just playing with you, bro. I'm just joking.
Well, no, I mean, I've put my whole plan around trading carefully and all this so I could like not freak out. And now I'm wanting to put some more fun on in some accounts. So it's balance.
Okay, that's fair. I thought about that too, actually, Terry. And here's my solution. So on Sunday of the week of competition, I'm gonna call Luke and I'm gonna say, "Hey, bro, unleash the capital. Let's make market liquid again."
I love that.
So
Yes.
we're gonna take care of that side, I guess.
Okay. Yeah, and then it's on. It really
That was
can.
fun with the arena. Like we hit it on a really good week. And the one that was my trade is like the people that hit that major market move on Sunday night were so far ahead. It was like, what's the point in trading if you didn't get that one? But
Yeah, and it really is full porting, like those arena competitions, in order to end up on the top like 10.
But it is more fun that way. And even though it's like not my typical trading style, I still enjoy challenging myself with it. So I mean, I'm for it. I actually think it's interesting to see how everybody falls too. And then you've got like Ash and Tom who are really methodical traders too. Nick is pretty methodical too. So I wonder if they're going to put on fewer trades, and then we got Terry and Burke putting on more trades, something like that. I think it would be interesting to see how it ends up. Will the aggressive people win?
I'm excited. Let me see.
That sounds fantastic, Burke.
I will tell you, a week long is a long time for a trading competition, as I found out, because some people are trading every single move, and I can't do that.
Yeah.
I could do it for a few days, not all week.
No, same for me. I get a headache looking at the charts all day long. For me, it's just one trade and then move on. And that trade has to be made probably like before 11 a.m. Eastern, or ideally.
And that's how my normal trading is. But the arena trades, if there's a big move, you have to be in it. Or the competition trades.
Yeah, you can't miss it.
So that's why it's good to have it like a few days instead of.
Ash Trades is in the backstage right now. Ash, I actually want to put you in. Give me a thumbs up if you're ready.
Ash.
Ashy Ash. All right, he's ready. Let's put him in, and then giveaway time, and then I gotta jump off. But it was fun.
Burke, we love having you on. Absolutely love it.
Ashy.
Good morning. How's everybody doing today?
Doing great. Getting old.
It's Burke's birthday.
Happy birthday, Burke.
Thank you, my friend. Getting old today. Getting in the old man territory. But I appreciate you.
He's old. He's not old.
No, I feel like 21 anyways. But...
Yeah, hopefully I could just stay like 25 forever, even though we're at 30 already. But in my mind, we'll just be 25 and we'll be good to go.
I know, right?
I have a friend every year. It's her 21st birthday. It's always 21 every year.
That's funny. Okay, giveaway time. Okay, guys, you ready? Chat, are you ready for another giveaway? Let's do this. I'm giving away 55 free resets with the code SPECIALGIFT55. Be fast because y'all are wild. These codes are literally running out in milliseconds. It's faster than NASDAQ on a 1 second time frame. I'm checking if it's expired. It's not expired yet. Interesting.
Special gift 55 for a free reset.
And it's gone.
Jeez. Shouldn't Burke be getting the gifts today? It's your birthday, right? Even though you're giving away the gifts?
I am the type of guy who likes to give. So
we're sharing the birthday.
Yes. It's me showing gratitude for everyone, basically.
That's why it's birthday instead of birthday.
Yes, it's birthday. We're having breakfast. All righty, guys. I got to jump off. It was fun. Ashley, I'll let the floor. I'll pass it on you. Barbie, Terry.
Bye,
See
guys.
you tomorrow.
Happy
Bye,
birthday.
chat. Thank
Bye,
you.
chat.
Thank you, everyone.
Alrighty, have a good day. Hope you enjoy the birthday.
Thank you, my friend.
Good morning, good morning, good morning. Or good day, depending on where you're from. What's up, everyone? Welcome back to another segment with myself, Ash Trades. How's everybody doing today? W in chat for Burke, once again. Birthday day for Burke. Yeah, he's over here giving away accounts and resets for everybody. What a gentleman. How's everybody's day going so far, chat? Good morning, good morning, good morning, or good day, depending on where you're from. Very excited to get back on here with everyone. Another day, another learning opportunity. Let's see how chat's doing so far today. Throw a 1 in chat if you're green on the day. Throw a 2 in the chat if you're red on the day. And throw a 3 in the chat if you've yet to trade today. See how everybody's doing. Some beautiful moves here from NQ and ES at New York Open. We're going to go into it any second here. Just taking some time to say good morning to the community and welcome everybody into my segment, and then we'll get into the information. Very excited to be on here with you guys again. Always looking to get 1% better than our prior selves every single day. Hopefully everybody's day is going well. Hopefully everybody's week is going well. See how chat is doing so far. Starting off with some 1s. Very nice. Very good. Very good. Couple 3s. Mostly 1s and 3s so far. So what did you execute then? Was everybody able to grab some longs this morning, or were you taking shorts? What type of move did you take advantage of? Right here at the open, it made a nice move lower, right? We swept out the highs after sweeping out the highs, right? After getting rejected, whatever you want to call it, doesn't really matter. Right here at New York Open, rejection at the highs sends us back to the lows, support at the lows, and then we get sent back to new highs. So 2 very clear moves here to start off the day. We're going to talk about them in a second. I'll provide my top-down analysis. I'm also doing well. Thank you for asking, chat. Greatly appreciate the kind comments. My day is going good. Got one more day, though. Got to sprint through the finish line, not stop before it. We have today's segment and then tomorrow's segment, and then it'll be the weekend. So let's continue to keep working. Let's continue to keep learning. Bunch of longs and a bunch of shorts. So it could have gone either way this morning. Looks like chat is pretty divided. Some longs, some shorts. Well, let's take a look at it. Here's my top-down analysis. Heading over to the daily chart. Let's take a look at ES. It's going to be a little bit repetitive because it's the same as yesterday. It's pretty unfortunate that we got stopped out on that Trump news, but it looks like that move that we were looking for yesterday ended up playing out today. So the logic still remains the same. In my opinion, it was just bad timing. So we can't control Trump, and that goes to show you the random distribution of probabilities. This is why we create a game plan. This is why we use certain approaches to the market, because the market can and will do whatever it wants whenever it wants to. You cannot control what the market will do. But if you can identify certain things, and when you're capable of identifying that helps you execute a strictly defined risk management, That's our job as risk managers. That's our job as traders, to be able to create a game plan by identifying something, then execute that game plan with strictly defined risk management. We cannot control when Trump is going to tweet. We cannot control the reaction to the news. We can identify our concepts. We can define our risk. So control what you're capable of controlling, then allow the probabilities to play out. Okay? So I'm still bullish. We're looking for higher prices. This is why yesterday we swept a daily swing low, a location to have a bullish bias. At this daily swing low, NQ made a higher low, right? So you have a Kraken correlation here. This is what bullish SMT looks like. ES took out the swing low of the 14th of July. NQ did not. That's a Kraken correlation. Okay, so on top of the bullish location to have a bullish bias, you also get a Kraken correlation. The market is tipping its hand, saying that we want to reach higher. Okay, so same bias as yesterday, same exact reasoning to yesterday. So therefore, going into today looking for longs makes complete sense in my opinion. It looks like we're reaching for this target here. Then when you go down to the hourly time frame, this is what we were dealing with yesterday. Was take this off the screen real quick. Okay, so now this is what we were dealing with yesterday. Same target, same higher time frame point of interest. We were looking at a bullish change in the state of delivery here, and we pointed to longs like this. Okay, so it looks like the logic was correct. It looks like we were on the right side of the market. It's just unfortunate that we got stopped out before the move occurred. Right? We can't control what Trump is going to say. We have no clue when he's going to say anything. We have no clue what the reaction to it will be. The important part here is that it's the same game plan. It's the same concepts that I look at. The process doesn't change. That's the point that I'm trying to make here. Fall in love with the process. Allow the results to be a byproduct of it. It's the same thing that I've been talking about throughout my entire time being here. Starting on the daily time frame, creating a bias, looking at swing highs, swing lows, and FEGs, then looking for a Kraken correlation to confirm that bias, and then using our model to get long, using our model to follow the bias we have. Okay, so beautiful move. You can see the higher prices today as well. So this morning, I would still be bullish thinking that this is the target. Now, to engage with bullish prices today, it's the same thing that we always talk about. So let me ask you, chat, where do we look for longs? If I'm on an hourly chart, I'm using that as my higher time frame points of interest. Where are locations that I would want to look for longs? Throw it in chat, and then we'll continue the conversation. What are higher time frame points of interest? Where you want to look for longs? That's the question. Throw the answer in chat. Very good job, Q Mendez. Below old swing lows. Very good job, Christian. Fair value gaps. Very good job. Very good job. Guillermo, very good job. FEGs. Junior, very good job. When you're bullish, I want to look for lower time frame bullish entry functions at higher time frame swing lows and fair value gaps. So now let's take a look at it. Since we just outlined a higher time frame bullish bias, since we just outlined a higher time frame draw on liquidity, we know where price is reaching for. but now it's a matter of executing that idea. We need to know where to look to get into the market. That location would be swing lows or bullish fair value gaps, right? So we have multiple of those locations here, and I'm specifically pointing to this one because once again, you get the confirmation to your idea from the SMT. Okay, so take a look at ES. Notice how the swing low on ES, price never went below it. Let's hop over to NQ. Take a look at how NQ this morning at New York Open swept that same swing low into the bullish fair value gap. Okay, now if you were to take the information that I keep presenting here and execute that logic, look at the drawdown that you would have gotten here. This thing barely goes below the swing low, right? If you're looking below old swing lows for bullish entry functions, look at how nicely this reversed from the swing low and bullish fair value gap. The way that you can see that happening is the Kraken correlation, right? I keep saying that the SMT is what confirms the idea. Look at the SMT. So let's mark this out and we'll go down to the lower time frames. You can see here that ES during New York Open, right? So the important time of the day, New York Open, it creates bullish SMT. You can very clearly see this right here at 9:30, while NQ at 9:30, once again, time being our most important element, right at 9:30, we set the bullish SMT at the higher time frame point of interest within a bullish higher time frame bias. Do you see how all the logic fits together? If there's anything that doesn't make sense about that, please feel free to throw that in chat. But this is the exact criteria that we look for. This is what we've been talking about for the past 2 months since I've been on live stream with you all. Creating a game plan by starting on the higher time frame, getting a bias by looking at swing lows, swing highs, and FVGs. Once you get a bias, then look for higher time frame points of interest to execute that bias. When we go to execute that bias, the thing that confirms the overall idea is the SMT. If any part of that process doesn't make sense, let's continue to keep reviewing because look how valuable that logic is. Imagine if you're able to take it from the higher time frame point of interest. Look at where you'd be now. That's the entire game plan in a nutshell. You really don't have to make it any more complicated than that. You don't need hundreds of different things to get into a trade. Understand your process, fall in love with it, then allow the results to be a byproduct. You just need to know that there's a random distribution of probabilities because even though it worked out today, it did not work out yesterday. Right? Yesterday's was a stop loss. I would take yesterday's trade 10 times out of 10 times. It's the same exact logic. You just have to understand that we deal with probabilities here as a trader. Amazing trades are going to fail, just like how horrible trades are going to win. You cannot control the outcome. You can have the same exact probabilities and get 2 different outcomes. This is why we manage our risk. This is why risk management is the #1 priority. All right, so then that leads into the next conversation, which is the risk management. Before we get there, let's just point to the target, finish the analysis, and then we'll have that conversation. But same exact information as yesterday. We're looking for new all-time highs as the target. You got bullish SMT there at the lows, 2.2 higher prices. Should I trail my runner for CPI day high? You should not make any of your decisions based on what anybody else has to say. All of your decisions should be made by yourself, and it should be made through the lens of risk management. Never listen to anybody else. That's a very bad idea. Develop the skill on your own. That's where conviction comes from, building the muscle memory. Do not listen to other people's opinions. Do not take other people's advice. Learn this skill. Develop your own edge. This will be the target. Whether that happens today, tomorrow, the next day, we're looking for new all-time highs once again. Looks like NQ will probably get there first. So the bulls are still in control. The bulls are still in control. Sorry to all those bears, but we're going to continue crushing new all-time highs. If anybody remembers in the beginning of July, I don't remember which stream it is, so just go back through the recordings to fact check me. Remember in the beginning of July, I don't know if I correctly said the statement, but there was, in the beginning of July, we reviewed all of prior July's performances. We had talked about being bullish for July just because prior history shows, I think it was something like out of the last 10 Julys, there was only like 1 or 2 red Julys. So majority of the time in recent history, July had an increase. I think we're getting that again. So we'll see where the month ends up. We could just go ahead and do it again now, but let's take a look real quick. July is looking green so far. Let's go look at last July. I think the last July was the red one. Yep, so one red one. Green one here. Green one here. Green one here. So this is what we did in the beginning of July. I don't remember the exact statistic, but we were pointing to the probabilities of July being green. And from recent history, it looks like there was only one so far out of the last 10, or let's keep looking. This one's green. This one's green. So many green Julys. This one's green. This is back to 2018. There's only been one so far. 17 is green. It really might be 10 years. This one's green. Jeez. Last one, let's take a look. This one is green. So out of the last 10 Julys, only one July was red. I'm pretty certain that in the beginning of this July, we pointed to that statistic, and you're seeing that now. If anybody wants to get a little bounty, go ahead and clip that. Send it to me. Same thing goes for the long-term conversation too. If anybody wants to clip the very beginning of me joining the stream with the long-term conversation from April too. There was a conversation of being bullish here back in April. To give you a little hint, I believe that conversation happened probably second or third week of April. Pretty certain it was after the historic day, a few days after the historic day in here. But bulls remain in control. Overall conversation is that the bulls remain in control. Trend is your friend until the end of the trend. Okay. If anybody finds those clips, DM me on Twitter. Looking for higher prices. We'll look for this to be the target, whether that happens today or tomorrow. Same thing there on ES. All right, so do me a favor. If you're finding any value from these streams, whether it's the education, whether it's the trades that we go over, whether it's the hosts, whether it's the guests that we have come on stream, whether it's all of the giveaways that we do, if you're finding any value from the community, do us a favor, like the video, sub to the channel, turn notifications on. We're going to continue to keep working and learning every single week. That way you could also communicate with us here in chat. I believe the chat is sub-only mode, so make sure you sub to the channel. That way, when you have any questions or information that you want to go over, you can communicate with us here in chat. Hopefully everybody's week is going well. Hopefully everybody's day is going well. Let's hop into the risk management conversation too. There's a lot of people that continue to underestimate risk management. And there's many different reasons that they underestimate it. First thing that I have to say is we need to develop a maximum loss limit. Okay, so if you're still struggling with blowing up accounts, if you're still struggling with over trading, if you're still struggling with oversizing, it's time to listen up. We're going to have a quick risk management conversation. Ash, would you please say specific levels instead of just saying target here? This is a specific level. This is very specific. It is attached to an exact candle. You can just go and look at what new all-time highs is. This is very specific. It doesn't get any more defined than this. That is one exact level. We are targeting new all-time highs. There is only one all-time high right now, so it doesn't get any more specific than that. Okay. I'm going to go into a risk management conversation. For anybody that's still dealing with overtrading, oversizing, you have to understand that you need to set a maximum daily loss limit for yourself. Okay, and it needs to be adhered to. That's the first thing. Second thing is if you're incapable of adhering to that daily loss limit, next step is to put proactive approaches in place to limit that risk. For example, lock yourself out of the account once you hit a limit. Okay? Or delete the apps off of your phone so you have no more access to it. Seriously, the respect that you give your risk management is going to be shown in your results. So if you're not going to take your risk management seriously, then it's going to be very hard to make progress in this business. In my opinion, you should divide your drawdown by 10, right? Whatever your maximum loss limit is, divide that by 10. Use that as a daily loss limit. Okay? That way, even when you have a horrible day, you have to have at least 10 horrible days in a row to actually blow up the account. And that itself will be progress for all those individuals that are instantly blowing their accounts the day that they get them. You're at least making it 10 days. Okay, you got to give yourself multiple opportunities, because the fact of the matter is you're going to have wins, you're going to have losses. Losing in this business is inevitable. So we have to figure out, as risk managers, the best way to lose. How do you put the odds in your favor when you know that you're going to lose half of the time, maybe even majority of the time? Because a realistic win rate is going to be, 40%, 50%, 60%. If you come in here thinking that you're going to have a 80% win rate, 90% win rate, especially as a beginner, that's, in my opinion, very unrealistic. Okay, so if we know that we're going to lose half the time, how do we ensure the fact that we still make progress in our accounts? Starts with that maximum daily loss limit. That's the first thing. Once you understand what a loss is, then you can understand what a win is. Okay, so now I'm going to use random numbers. You obviously have to fit this to your account. We're all trading different accounts. We all have different drawdown limits, but the fundamentals remain the same. Divide your drawdown by 10. That should be your maximum daily loss limit. Make sure that you have risk measurements in place to adhere to that daily loss limit. Let's use the number 500. If 500 is your daily loss limit, then you know what is a good loss and a bad loss, right? If you're losing $1,000, if you're losing $2,000, if you're blowing up the account in 1 day or 1 hour or one open, you know that's a horrible loss and you shouldn't be doing it because it's more than $500. Okay, so you know when you're stepping outside of your process versus when you're completing the process correctly, because that's the important part here that the conversation is going to end on, is that we need to fall in love with the process and allow the results to be a byproduct of it. Once you understand what a loss is, that also helps you understand what a win is. Okay, if we know that we need a 1 to 2 risk to reward because we have a 50% win rate, we also know that our losses are $500. That means we need our wins to be $1,000 or more. We need to focus on having 2R as our risk to reward. Okay, so during the time of management, you need to understand that, because price fluctuating, that's going to induce emotions that are going to take you away from risk management, right? You're going to see the number go up plus $100. You're going to see it go down minus $100. Then you're going to be like, oh, if this thing comes out, if this thing goes green again, I'm not going to let it go red again. I'll protect myself. No, don't, in my opinion, don't move it to break even. Don't allow price fluctuations to induce emotions, because you need to focus on getting that plus $1,000 winner, not a break even trade. We need to focus on risk management. So control the thoughts, control the emotions to allow the probabilities to play out so you can focus on having large winners. Now that we know what a loss is, now we could understand what a good win is, a bad win, a phenomenal win, right? If your wins are only $100, that's a bad win because your risk is $500, right? So it only takes one loss to ruin your progress. That's a bad win. A good win would be a plus $1,000. That means when you have a win, that'll make progress there. That'll get rid of 2 losses instantaneously. But your actions need to align with that. Your emotional intelligence needs to align with that. You have to allow price to fluctuate until you get to that 2R. Price is not going to move in one direct line. It's not just going to do what you want it to do. You have to be emotionally and mentally controlled enough to allow price to go to 2R. Okay. Now, even if you want to be greedy, you still have to choose risk management over being greedy. So what I'm trying to say here is, let's say the position did go plus 2R. Let's say the position is now floating a positive P&L of plus $1,000. Lock in the 2R by throwing a stop loss in at plus 2R. That way you're choosing risk management over being greedy. You're confirming the fact that you will minimally get 2R. And then you're allowed to be greedy to try to reach for 3R, 4R, 5R to have a phenomenal winner. Right? Now we know what a bad winner is, a good winner, and a phenomenal one. We need to make sure our actions align with that. We need to at least be looking for 2R. And if you have any type of emotion of being greedy, at least confirm the 2R. Because the reality of the scenario is the large wins are what makes progress in accounts. And I've shown my statistics on the live account throughout my entire time being in the live account. The large wins is what did the heavy lifting. Wasn't the win rate, because it was a 50% win rate. It was you lost some, you win some. You lost some, you win some. It goes back and forth. But the time you have a large loss, that's when you make the progress in the account. Excuse me, the large win. Okay, so proof's in the pudding. The live account is there. We spoke about it for the last 2 days. Phenomenal 100% return on the initial balance over the time of me being here with you all. Job's not finished, though. We still have to fall in love with the process. If we're going to show up and execute, you cannot attach your identity to any prior outcome. Doesn't matter if it's a win or a loss. You still have to fall in love with the process. So all of that has happened. Yay, great. I'm very happy about it. But in terms of executing, I'm going to remain objective and continue to keep implementing the process. So that was my risk management discussion today. We're going to do educational pieces. We're going to do live trades. We're going to do giveaways. We're going to communicate with chat. We're going to do questions and answers. We're going to try to hit on all aspects of the trading business. That's the purpose of the community. We're looking to work and learn every single day. So sometimes I'll be trading. Sometimes we'll be doing education. Sometimes we'll be doing giveaways. Sometimes we'll be doing questions and answers. We're going to keep it fresh here. We'll keep changing it up. So now that I got the educational segment done, if you do want to ask any questions or comments, we can now move into a Q&A. So I'll hop over here to chat. If you did have questions during that time of, I was not reading chat clearly. Throw the question or information back into chat. I'm refreshing the page now so that I could get updated on chat. And let's see how everybody's doing today. Still getting the higher prices there. NQ, target hit. There you go. Congratulations. Beautiful bias. Beautiful information. Once again, the logic is showing the value here. Maybe that's a little piece of advice I should throw in there too. And I kind of hinted at that when somebody was asking me how to manage their position. It does not matter what anybody else says. You should not follow anybody else's information. You should not do signal services. What you should be doing is collecting the information on your own, developing your own edge, your own skill. The purpose that we're all here is to have a source of income that nobody can take away from us, right? So if you're relying on somebody else, I highly suggest you build the muscle memory on your own, obtain the conviction on your own, so that way you don't rely on anything, okay? Don't let somebody else tell you how to manage your position. Don't let somebody else tell you what your bias is. You should be able to understand the information on your own. And the only thing you should be able to rely on is internet and electric, right? Because we at least need to rely on internet and electric so that we can trade. But purpose is taking complete ownership. That was the reason for the comment. Being able to have the edge on your own so that you don't have to adhere to anybody else, that you can execute your positions on your own. Being an independent thinker is a very valuable skill. Having the muscle memory is very valuable. All right, enough of the rants today. Too many educational topics. Let's get over to chat. I have 20 minutes left here on my segment. Amazing move. There's your bullish move. Target's been completed on NQ. Amazing job by NQ. Let's see if ES wants to catch up. Still the target here. NQ got its new all-time high. We'll see if ES does. Ash, can you go over the breaker again? You have a bullish breaker and a bearish breaker. All right, here's a bullish one. A bullish one is a swing low, a swing high, a new low, then a new high. Each one of these swing points needs to be either a swing low or a swing high. Okay. By definition, here is a swing low right here. Take a look at this. We're looking at 3 candles. 1, 2, 3. By definition, a swing low is a 3-candle pattern. It could be a 4-candle pattern. The importance is that you have a higher low, a lower low, then a higher low. So the first candle and the third candle are going to have higher lows compared to the second candle. That's what a swing low would be. Same thing with swing highs, right? Here's a swing high right here. First candle right here, second candle right here, third candle right here. By definition, a swing high is a 3-candle pattern where the first candle and the third candle have lower highs compared to the second candle. So now that you understand what a swing low and a swing high is, that's what we need to define a breaker. We need to have an initial swing low, initial swing high, a new swing low, then a new high. The breaker's always going to be found in between the first swing low to the first swing high. A bullish breaker is going to be an up close candle. A bearish breaker is going to be a down close candle. So a bearish breaker is the same exact thing, just the opposite. Swing high, swing low, new high, then a new low. You'll always find the bearish breaker in between the first 2 initial swing points. A bearish breaker will be a down closed candle. Okay, so let's take that over to price action, and you can see it here. Let's do it. Swing point number 1, that is a swing low. Swing point number 2, this is a swing high. Swing point number 3, this is also a swing low. Then we get a new high. All right, so we have all of the institutional swing points that I just mentioned. And now, like I said, the bullish breaker is going to be an up close candle. All right, so in between number 1 and number 2, highest up close candle, that's your bullish breaker. Okay. Same thing here on NQ. NQ is just looking a bit stronger. It went to the target first. Okay, bullish and bearish breaker. The market could only reverse 2 different ways. I guess 3. So here's the 3 different ways. Number 1, market could reverse like this, V shape. Number 2, our entry function, a breaker. Or number 3, a failure swing. Right? The market could really only turn around 3 different ways. I'm trying to use one of them as my entry function. That's why we use breakers right there. Right? So, and you can see it here. Market turned around from this breaker here. Unfortunate that they had to stop me out first yesterday before moving higher, but logic was correct. The timing was wrong. And that's what day trading is. Logic remains the same. Probabilities and outcomes change. Where would the entry point on the breaker be? I use the beginning of the breaker as the entry location with the stop at the low. So obviously we would use it we're on an hourly, so we wouldn't be using this one. This is way too much risk, right? There's a very large stop loss. We would be executing on a 5-minute chart, right? So let's take a look. So here's one. This was during Asia. You can see all the swing points, and you can see the difference in risk is what I'm going with here. Lower time frames will have smaller amounts of risk because the price fluctuations are smaller. So if you were to look at this as a breaker, I would say you're correct. You have the FVG in there. So this is a bullish unicorn. So this looks like a long right here. So 2.75 of risk in terms of points, and goes way more than 2R. So this is a good example of a long right here during Asia session. Equal highs to aim at. Good example of a breaker there. All right, so that leads me to saying we don't just instantly execute a breaker because there's a breaker on the screen, right? We're not just pattern traders. You have to understand that you have to provide logic to your decision making. Okay. You want to be aligned with higher time frame order flow. That's why we go to get our bias from the daily chart. Time is the most important element. You want to be executing during the opening times. Then we look for cracks and correlation at higher time frame levels that are aligned with our bias. We do all of those things first. That's the logic that we use. And then we look for this. But notice the order, notice the sequence. We do the logic first. We game plan first. We look for confirmations first. Then we look for our entry function. Why during the opening times? Well, does anybody see the importance of 9:30? Does anybody notice how the market sees volatility at this exact time? Right, that's because that's when the public is allowed to start participating in the stock market. So 9:30 comes all the participants. That goes to show that 9:30 is an important time. Everybody shows up to the market. The mass majority shows up at that time. And then on top of that, look how important this is. Look at 9:30 here. It was the bottom to today's reversal. Whether there's a reason behind that or not, the opening times are important. They did a fake move lower right into 9:30, and then right at 9:30, instantly go back to new all-time highs. Is that a coincidence? You tell me. Yep, 8:30 is just as important, right? There's got to be a reason why they set news releases at 8:30. Yeah, we get on the economic calendar to understand those red folders before every single session. That is why I said time is the most important element. If you go back through any of the recordings, you'll see when I'm developing my game plan throughout my time being here with you all that I'm analyzing time first in terms of a game plan. It goes time, bias or draw on liquidity, then entry function. Very good questions, chat. So, any questions, any comments, any information you'd like to go over? NQ took its target so far. Very good job. New all-time highs for NQ. We'll see if ES could reach there as well. Ash, do you have a standing desk? Yes, I'm currently at a standing desk. It is electric, so sometimes I'm sitting, sometimes I'm standing. Depends on the day. Ash, how do you deal with mental capital and the feeling of burning out? So that is exactly why we have those limits in terms of trades, right? If you're going to trade hundreds of times a day, you're going to get very burnt out very quickly. This is why I put limits on things. Same thing with the amount of time that I stare at this chart. I'm not staring at this chart from, Asia open to, the close of the daily candle. I'm only staring at the chart for a couple hours a day. Same thing with only taking a certain amount of positions within one day. You really need to put limitations on yourself. And when you're doing that, make sure it's under the logic of being here for the long term. Find ways to make a healthy relation between you and risk, because we need to be comfortable with risking. So if you're looking at this chart so much that it's it's creating emotions, if it's burning you out, if you're losing focus, lessen the amount of time that you're on the chart. Less is truly more, quality over quantity. I mean that in terms of time. I mean that in terms of risk. I mean that in terms of sizing. I mean that across the board for all of risk management. You're going to have to deal with delayed gratification. It's going to take time. Okay. You need to have a healthy relation with risk so you're comfortable with risking when you do. And you have to be here in the long term, because the quicker you blow up, the quicker you're out of the game. So put things in place such as, only looking at the market between 9:30 to 12. Put things in place like locking yourself out of the account after you've taken a trade. Put things in place like going to the gym at 12 o'clock each day. Put specific things in place to better that relation with risk. You should not lose yourself in this. Family is the number one priority. It always has been. Health is the second priority. So always put your family and your health first. Don't lose any of that because of a want or a need in this market. So, got another 9 minutes here before my segment ends. Once again, if you're finding any value from this, going over all these trades, going over the logic, having different guests show up, doing all these giveaways, if you're finding any value from this community, do us a favor, sub to the channel, like the video. That way you can communicate with us here in chat as well. I hope everybody's having a great day. Another great learning opportunity. Very happy to see that the Bulls are still in control. Quick conversation in terms of the long term as well. Once again, I'm going to bring it up for a third time now. We talked about this right here. I believe that was last week. Okay. If anybody is coming in here and using my information, you have to understand that this right here, we were talking about long-term purchases. This was a dividend conversation. You have to understand the objective to your position, right? If you were just looking for a little increase on, information I'm presenting, then you've been given that increase, right? We talked about this on Wednesday of last week, and that's a 6% increase. If you were looking for just a quick little buck, take your money, call it a day, and be done with plus 6%. If you're looking for the dividend, then you have to wait until the beginning of next month. They're on a 4-week schedule. This objective to that position should have been decided on before the position was created. That way you understand the objective. If you're looking to collect the dividend, then you got to at least hold until the ex-dividend date, which means that increase on the initial balance is going to change over the time of waiting. If you were just looking for a quick little swing trade, you've already been given 6%, call it a day, be done with the position, take the money and be done. If you're the individual that was looking for the dividends, then know that the objective is the dividends and wait for the ex-dividend date. This is going to be my last update on this, okay? We spoke about it 3 different times here on stream now. Now you know that the move has been completed that we were looking for. We got a nice plus 6%. Be done with it if you were just looking for a swing trade. Sorry for any of the individuals that were not here during that conversation. Going to have to show up to the live streams to get the information daily. Ash, at all-time highs, how do you find new levels? Just go to the hourly chart and use the market structure. Use the hourly chart and use the most recent information. Trend is your friend until the end of the trend. Okay, so you don't need to point to a specific level up here to say that you're bullish. Just look at the market structure is what I'm telling you. Follow the market structure. Right now, this thing is in an uptrend. Remain bullish until it says otherwise, is what I'm saying. Right? So there is no levels up here because it's all-time highs. All we have to do is follow the trend, right? Here's the break in the trend right here. That's when we would know maybe some of this bullish intention is slowing down, right? Until then, trend is your friend until the end of the trend. Very good question. What to do at all-time highs? Overall answer is follow the market structure. So, last 4 minutes before Tom starts his segment. Definitely stick around for Tom's segment. He's been providing value on a daily basis. Ash, isn't that a unicorn on the 1 minute? I have no clue what chart you're talking about. You got to be a little more accurate with your comments. Right? Are you talking about NQ, ES, oil, Dixie, Euro? Ash, do you think that having a correlation on the unicorn, both ES and NQ showing the setup at the same time will increase the win rate? That's not information that I look at. That's not something that I have the data on. So I'm not going to provide low quality answers. If I don't have the information, I'm going to have to defer to somebody else. That's not a statistic that I've kept, right? If ES and NQ both have the same setup at the same time, does that increase the probabilities? That's not a statistic that I've kept, so I'm not going to be able to respond to that one. I'm sorry, but I'd rather not provide low quality answers. So, what I will leave you all with here: trend is your friend until the end of the trend. Don't try to be the individual that picks the top. You do not need to be first to become bearish. Stay aligned with the higher time frame trend. Stay aligned with the higher time frame momentum. We are still making new all-time highs. We continue to keep seeing higher prices. Stay with the trend until the trend ends. There needs to be a very clear, very decisive information on a higher time frame showing that the trend has ended. Until that happens, stick with the trend. All right? So, trend is your friend until the end of the trend. Let's continue to keep working and learning every single week. So, my segment is coming to an end here. Just want to take another moment to say thank you once again. I am truly grateful for the opportunity to get to work and learn with the entire community. Getting to go over all these questions, getting to go over this information on such a consistent basis is really providing a lot of value.
Yeah.
Okay, so thank you for your time. And let's welcome Tom up onto stage. Tom, how are we doing today?
Hey, everything is cool. Everything is great. And I was just enjoying listening your segment as always. How was your day so far?
Very good. I actually have a family friend that is coming down to visit. So I'm going to hop off of here and go pick him up from the airport. I'm actually very glad to see some family and some friends for this weekend. So I'm pretty happy myself. Thanks for asking.
That is awesome. Yeah, we always need some IRL family time. Everybody need to recharge and need to have those moments. Like, it's crucial for trading. All right.
Absolutely. Well, thank you for joining once again. I really appreciate your time here. It's been a pleasure getting to work with you, and all the information you provide is very valuable. So
The
I
same
really
as well.
appreciate your time.
The same as well on my end, Ash. Always glad to listen all the valuable information. So have a good time with family, recharge, and I guess see you tomorrow, right?
Absolutely. All righty. Have a good day.
You too. All right, everybody. Welcome. Good to see everyone. Good to see the chat. Oh, and it's always good to be back. It's always good to be back. For the positive vibes, welcome. Special hello to the hosts, to the mods of MyFunded TV. How is everybody doing? Let's go. Doing great. Thank you for asking. Crazy price action a little bit. Not too bad. Not too bad. But, during the Trump market, I think we need a precise schedule of where the president is going every single day. But that's a different thing. Good to see everyone. Good to see all the familiar names. And of course, I must say that always stick around at MyFunded TV. You never know. I've seen gold, actually. Yeah. I took a trade on gold earlier this AM session. I took a trade actually somewhere. Well, I was watching this fair value gap after the market open. It happened at 9:36. So I was a little bit late, but I took this trade live on stream. And if anyone is interested in the YouTube, obviously there's my YouTube handle in the upper right corner. So I took this trade somewhere from this congestion zone after the gap was still holding, and we went all the way up there to this zone. Now, this zone on the 1 minute, if we zoom in, and I just want to say this as another conviction that this 1 minute supply zone or bearish order block, which was actually here, provided an excellent target for my trade. And this was just beautiful to jump in, and we just took it. I was very glad about this trade. And I mean, usually I trade gold like 5 or 10% of the time, but this one was really good. So back to NQ. As for NQ, just a quick recap. I have some good topics for today too, by the way. So, yeah. So, quick recap from London. In the London session, there was one order block on the 5 minute or demand zone down here. This candle at 1:55 Eastern Standard Time on the 5 minute chart. Just a quick example for you guys. And I took a short based on the 1 minute time frame. I know this is the 5 minute, but I'm not going to do the switch up and down because you guys might get dizzy a little bit. But there was a 5 minute bullish order block here at 1:55. Perfect textbook order block. Took the short. Unfortunately, I went against my own rule, and what I did, I took partial down here somewhere around the 100s, 103, and then it went to my break even, and then finally went down to my original TP. But that was I said it live on stream. Like, this is exactly why I don't like to mess around with my positions and with my stop loss. But that's a different risk management thing. We talked about that, and we're gonna go there as well. And so the market open, the way I saw this, it was a beautiful sweep, actually almost like the classic seek and destroy, but not really. So right at the 7 a.m. kill zone start, it actually swept the London low, and then went higher, swept the London high, and then went down again, swept the low. And I was like almost convinced that we're gonna go again down to the 66 level, or yeah, it was 65, 66, but it didn't. And instead, I was testing an indicator, so I was just like, why not? Let's go. We took a long trade not too long ago. I closed it down like at 11 a.m. ish, up to 213. So that was a nice trade too. Overall, I'm green on the day. And yeah, so I'm quite happy. I don't think I'm going to trade anything after this. One thing, is because we're all-time high, and we're going to talk about this all-time high situation. I don't think it's a good idea to go long, because absolutely you have no targets, you have no zones to go for. In my book, seeing these all-time highs is just nothing. I mean, I don't want to go, even if maybe if we would see like the 20, maybe if it would be very close to the 300, then it could be good for a scalp. But at this point, the only thing I could be looking for, which I'm not gonna, is maybe a short position, right? But there is one more level down there that I like. I don't think it's gonna go down there. It's like, how far? 170 points. I mean, we saw NQ doing crazy stuff, but I'm not sure that we're gonna revisit that 23,050-ish area. There's an order block on the 5-minute formed at 1:10 a.m. technically in the Asia session. So that's the technical side of what happened today, and from now on, it's going to be a little bit difficult to look for a trade. If you're, as I always say, if you're in the green, I think it's a good time to walk away, but don't walk away. Stay with MyFunded TV. You know why. And of course, lots of valuable information, but just, all the giveaway bonanza. Who knows? I didn't say anything. But we're going to talk about some good topics today as well. So some good topics. And if you guys have some questions, let me know. Oh, yeah. So Sudip, about ES, I was eyeballing this level. Look at that. That's a 15-minute fair value gap right there. I actually had an alert, but I disabled it. I would say now that ES has actually reached this fair value gap, this could be a possible reversal. If you guys are so much into the SMT stuff, we might be looking for some short position. Who knows? Verbon, hey, good to see you. So, Raphael, I blew my funded, and my friend must have felt bad because I won the same. Oh, well, if you won already, then that's a good thing. Okay, so ES just reached a fair value gap, so that means some sort of a pullback or correction could be possible, but it's really a risky one or low probability trade, so just be careful. There's no reason to push it, especially as we're going into the launch hour, but we always say that, right? I see there were some winners. Congratulations. 6 DMs already out, 15 to go. Awesome. Let's go. We love this. I mean, really, MyFundedFutures is just, giving so many free stuff to you guys. Next time, I'm not even going to tell you the code. I'm just going to have the free resets and the accounts for myself. Why not? Okay. Let's just go into the topics. I think these are quite good ones that I chose for today. And we're just going to start with a much shorter one, or a simple one, which is, where did I put that? Actually, I have it somewhere here. Yeah. So this topic is about how FOMO distinguishes itself as conviction, right? So how fear of missing out distinguishes itself as conviction. Because sometimes we do chase some trades, right? Don't tell me it never happened with you guys. So, you see something going to your target and then you just jump in because you felt like it should be going there, but maybe the setup is not even there, but you still want to jump in. And then it's a false conviction. You got to be a little bit careful with those feelings. And so we're going to dive into this because I think it's super important. So saying that, I have some bullet points. iLogo, hey, okay, so we're going to go into that. Once you hit the profit target on eval, what happens? Next steps, well, you're going to get your funded account. Sometimes the funded account is ready within just a few hours or less, but should be ready with in a day or two, usually in a few hours. All is automated, so don't worry. I think I had recently I had funded accounts being ready in like an hour or two. So don't worry, you will have it. Okay. So let's just go into this topic. What does this really mean? Okay. Like, you believe in the trade, but actually not. It's not the real case. You're just afraid that you're going to miss it, right? So let's just, for example, say that you thought that we're going to go down to Asia low after this drop, after this sweep, and you thought that, okay, we're just going to sweep those lows and we're going to go to Asia low, and you just maybe even oversizing and over trading this and just entering into sell positions. You want to chase it because you already missed maybe an opportunity. Let's just go for a 1 minute chart. No, there was no opportunity here, but still, you just wanted to sweep these lows, but it's too late. You still want to make some more money, and that's basically a false conviction, right? Chasing the trade, getting into the FOMO. It's not like you believe in this trade. It's just you're afraid that you're going to miss it, and that's going to lead to some big trouble. All right, we need to talk about this. Okay. You know what I always say? Stick around. Who knows? But so let's just go into this a little bit more. What does this really means? Like, obviously, everybody knows FOMO is fear of missing out. It's a little bit of a sneaky thing. Like, it doesn't always feel like panic, actually, because you're still convinced about the outcome, right? Sometimes it feels like an extra confidence, right? So sometimes the FOMO feels like an extra confidence. And that's the tricky part. That's why it's a little bit like a sneaky thing, like trading with the FOMO. That's why the best thing to choose when you're feeling that is just not to do anything. You have to accept the fact that there's more risk, even if you're right at the end, but there's still more risk. The possible outcomes is more than likely like it's going to go against you, or I would say even worse, it can build false conviction. It goes to your profit target, and then you might just feel invincible. That's the thing what we must fight against. Raphael, I forgot to ask yesterday, which account should I buy? 150K starter, 150K expert? Depending on two things, Raphael. One is depending on your financial situation. Obviously, the expert is a little bit more pricier, but I would say you have the most freedom with no consistency and no payout. I mean, no withdrawal cap there. So, and the scaling rule. Sorry, the micro mini scaling rule on the funded stage. So I would say you definitely have more freedom on the expert account. If you can go and pay a little bit more for the expert, I would choose that. Okay. And you can definitely have more wiggle room to trade, obviously, on the 150K accounts. So that's a fact. Absolutely. I think MyFundedFutures has definitely, I mean, I can't speak in the name of MyFundedFutures, but as far as I've seen and what I would bet for is I think MyFundedFutures is definitely not looking into the activation fee stuff again. So that's why everybody was super happy when MyFundedFutures finally waved goodbye to the activation fees. So this kind of business model is much better, I think. At least it's better for the trader too. You know, not just financially, but on a psychological level as well. My opinion. Okay, so as I said, it doesn't. I mean, the fear of missing out is not really feels like panicking, but it feels like an extra confidence. And you keep telling yourself that this move just looks strong, I'm just gonna take it, or I know this is going to rip higher, or I don't want to wait and miss my entry. And sometimes we do that. Sometimes, entering a little bit aggressively to a good setup. So just an example here. If you have a strong conviction that you have your zone down here, I'm just going to talk about from my experience. Let's just assume that this one here, I'm just going to put a rectangle there. So how should I put this? Let's just assume that price never actually went up there. Okay, so I'm just going to leave that rectangle up there. And let's say that you were ready to enter with the limit order, but the price never actually went up to that level, but you were still convinced that you want to enter, and you can actually take an aggressive entry. While your risk to reward ratio is still good, you can still take it, as I said, if your risk to reward ratio and your risk management is still solid. There's nothing wrong for not waiting for a proper limit entry if the market is moving a little bit stronger or faster in your direction, but it really don't want to wick inside that fair value gap, and it doesn't really want to take that limit order, and you just say, okay, I'm over it, I don't care, I'm just entering on a market order. That's fine. That's a little bit different than the actual FOMO thing. But and look at that. If your target was the zone, and you just seeing that this one is just going down, and you just maybe full porting yourself into a short position, look at how easily the market could have got you out there on this move. And eventually it got taken out the full zone there. And that's why it's a tricky one. It's a sneaky and tricky one, right? But anyway, let me just get this off here. All right. So you don't want to miss the entry, or maybe the market already started to move and you just entered too late, or you just keep saying to yourself like, oh my God, I need to be in this one, even if I have to oversize my position. I just need to be in this trade, even if I can only make a few points. I'm just gonna go in with like I don't know, 3 minis or 5 minis instead of usually going in with 5 micros. I don't care. I just want to make that extra 10 points or 8 points because I just want it. And that is obviously the tricky part of the FOMO. So let's just put these things next to aside each other, okay? So the FOMO versus conviction, like conviction in your trading model, in your entry model, in your analysis, right? It all comes down to the game plan and the analysis. So on the side of FOMO, you have emotion-driven decisions, right? And on the real conviction in your trading model, you have a data-driven decision. Very important. Totally different things that we're talking about. Okay. All right. On the side of FOMO, there are rushed decisions. For example, right here, I'm just going to put this here. You're rushing your decisions because you don't want to miss out the trade before it gets to the zone. And then you're getting caught up in this drawdown, even blowing up your account. And that is also based on FOMO. Like on the other side, it has a patient setup confirmation. Like, let the trade come to your way. If, for example, you're waiting for a higher fair value gap, for example, here, let me just give a different color to this. You're waiting for a fair value gap to be filled, and you say, okay, I'm just going to take that. This trade is rushed decision, emotional driven. This one is obviously data driven, proper risk management, and being patient and disciplined, waiting for the setup confirmation. There was a market structure shift here. There's a fair value gap. Even if you put a FIB tool here, you will see that basically this is optimal trade entry level. And you can still take the trade Because if you're still convinced and you have a strong conviction that the zone is going to get taken sooner or later, hopefully sooner, then here's your entry. And this is why it shows what can FOMO actually do to you. And this is exactly how I lost a bunch of accounts back in the days. And this is how I was failing the valuation accounts. Exactly this move. Sorry. This exact move that I was taking all the time. I saw the move happening. I was very, very convinced. Even it doesn't have to be a zone. It can be a swing high, swing low. It can be a fair value gap on a strong level. But I was so much feeling that, I mean, I was not just a FOMO, but really wanted to make that quick profit, that I just oversized my position. And by the time the price got here, either my account was at daily loss limit or worst case blown up. And then the feeling what you get after when you're seeing the market going into your direction, into your TP level, I think that's one of the worst feeling of all. And it all was caused because of FOMO. And don't tell me you never, I mean, I guess everybody sort of felt the same way during your trading journey, right? I mean, these situations and these two example, this example, I think happened to like almost every one of us. Don't tell me it didn't. Okay. All right. So just a second. Let me know if you have questions, because I still have more about this topic. Get stopped and market. Exactly, P Doggy. Exactly. It always happens. Unfortunately. My plans for the weekend. If I'm going to tell you my plans for the weekend. Actually, we're planning to go down to the Lake Balaton. Here in my country, we have the Lake Balaton, technically the biggest lake. We're going to drive down there and maybe not really fishing. I was fishing when I was a kid. Imagine, I was like 10, 12 years old, and I went down 6 a.m. in the morning, and I was fishing even when it was raining. And I don't know. When I was a kid, it was different. Nowadays, and it's strange to say because I'm practicing to being patient and disciplined in trading, but I don't know if I could. You know what? I'm going to rephrase that about fishing, and I need to stop here for a moment. I like fishing if there's enough, like I'm not a drinker really, but if there's some beer, I just sit down, maybe if we're down there with some friends, I let them do the fishing. I just sit back, relax, and drink the beer. And that's all. Something like that. Someone needs to teach me fishing. Yeah, so last time I was fishing, I was a kid. But yeah. So, yeah, I love the question, by the way. We're going to go down to the lake, and I think we're going to have a good time. Some walking, maybe eating some nice lunch. I love eating. I need to do something about that. And actually, I need to buy a bicycle. I think I need to ride a bicycle. I need to lose some weight, guys. There's nothing I can do. I'm just keep getting more weight. I'm sitting too much. Oh, yeah. Standing desk. I need to invest into a standing desk as well. What is your advice on passing the 50K expert eval? Tevin, there's no simple answer. I would answer with questions. Depends on your Tour de France. Yeah, it depends on your trading experience so far. Have you got payouts yet? Are you looking for the first payout? How much you've spent already on evaluation accounts? How much are you looking for to spend in the near future if you blow up the account? I'm sorry, these are crucial questions because it's in the cards how much you're still willing to spend. Yeah, we can talk about that SBM. So no, with some good interest, right? No, but yeah, these are questions you need to answer for yourself. But an expert account is like 1 day pass technically, so you can full port it if you want to. Now, I'm not going to deny I did some full porting back in the days. I did some of that. Somewhat good, somewhat bad results. I wasn't always proud of myself. And obviously, I think you have to respect your expert account a little bit more because it's definitely a little bit pricier than just a starter account. And I think it's a good it's something that you can use as an advantage now, because you're going to treat that a little bit better than just a cheap upfront cost account from anywhere, right? So the expert account, to pass that 50K, I would go for like a little bit more risk, definitely. If you're a little bit more experienced, go with a little bit more risk, like $200 to $300 at least per trade. Go for the A+ setups, and definitely choose the time of the day when the market moves the best. Okay, and because it's not intraday trailing, it's end of day trailing. You can actually aim for a little bit bigger risk to reward ratio, like 1.5, maybe 1 to 2. Why not? Right? So I think that's something you can do. But anyway, I think that's how I'm Hungarian. Yes, Lago, I am. So just to finish up with this thought here, and obviously, if you guys have questions, let me know. I just want to add a little bit extra to this example here. Like, I was many times in this first scenario here. That's how I blew up a lot of accounts, funded accounts as well, evaluation accounts. That's how I gave back all my profits when I just wanted to jump in at the last phase of this move. And never forget, and actually that's when I adjusted my TP levels as well. I mean, this could have been because of early profit taking. I'm calling it early profit taking, even if the algo or the big boys, I don't know, big players are seeing these levels, or the market is seeing these levels. There always could be some kind of a squeeze or early profit taking. So that's the main reason I'm never actually targeting the same exact level of the zone. I try to take early profits at least a few points earlier, like at least 2 or 3 points, maybe 5, depending on the level, but trying not to go for the exact level. In this case, I'm just using this as an example. If you targeted the level, as you can see, it just missed it by 1 or 2 ticks maybe, and then just went higher. So don't be in this first example. Wait for the trade to form for your setup. The risk to reward ratio here is definitely better. Look at that. Even if you're going with the 1-to-1, but I guess look at that 1.6 risk to reward ratio, even if you're just using this swing point here. But you can play it safe all the way up there. If you're super convinced about your setup, obviously go with a smaller stop. But if you're still having some doubts, nothing wrong with going with a 1-to-1 risk to reward ratio. And this is proper risk management, and this is a decision made on confirmation, and this is a data-driven decision right here, and this is based on FOMO. So again, FOMO trade, data-driven trade. Okay, the same direction, but 2 totally different decisions. You must understand. So yeah, just gotta say, all I can say is that these are 2 different things. So yeah, we're gonna continue with this topic, and all I can say to you guys is just stick around, because you never know. And when I say stick around, I always saying, you just have to stick around, because you never know. I'm trying to give everything.
It's giveaway time, the buzz is real. Spin the wheel for a major deal. Oh, my funded TV, the crowd's
Energy.
dreams are dropping like a neon sign.
We need some dubs next. I mean some This Is Good song. Let's go. I want to see the W's. Giveaways. Oh yeah, baby. So oh, this was fun. We love this. Oh, congratulations to the winners. I was sweating here. I was like, I got the signal from the mods what to do. I was already nervous. I lost traction of my topic totally. I was like, oh my God, how should I tell what's happening? How should I get the signal to you guys to rush? But hopefully you got it. Let's go. Let's go. Whew. I need to drink, guys. This was like, my pulse is still 130. Oh yeah. Do I have a pulse? I hope I do. All right. Where were we? You keyword. Yeah, I'm gonna give you some signals next time. Maybe I shouldn't. So maybe I'm going against. Maybe I'm going against some house rules with this. So, but I'm trying to help you guys. You know, I'm trying to give you some pointers what to look for or when to look for. All right. But hey, congratulations for those of you who have it. Congratulations for the winners. All right. I'm going to keep giving signals. Maybe not trading signals, but anyway, let's finish with this topic because I have another one too. All right. So again, quick recap. This trade based on FOMO, this was based on data. All right. But it's not just as simple as that. So the next thing, FOMO versus conviction. Two things. Okay. When we're talking about FOMO, there comes this feeling like I can't explain why. It's just a feeling, you know. I have a feeling that it will go there. That's FOMO. That's also kind of FOMO related. You're saying here, like, I have a feeling that it should be dropping down, taking the elevator. I have a feeling. I also say that, but I never take the trade. I used to say the same thing on my streams, like, okay, guys, I have a feeling that it should go down there. You heard me saying that a million times. But also, I keep adding that I'm not going to jump in. As soon as I say I have a feeling that it's going to go down, I always say, like, I'm not going to jump in because the risk to reward ratio is actually very bad. I'm just going to wait and see what's going to happen. So what can we put on the opposite side of just a feeling? Very simple. You can explain why, and you can exactly point the entry, the risk, and the exit. That's the opposite of just a feeling against exact entry, risk, and exit. Super simple, right? So that's real conviction. This is something you can't explain, just a feeling, but this one is an exact stop loss, exact take profit, exact entry point, and exact risk. Right? That's why you should not be pushing the button all the time. People, come on. Why are you keep blowing up accounts? I don't understand. I just don't know. Why you keep blowing up those accounts when we have the clean instructions here? You just keep blowing up those accounts. Imagine that you're here on MyFunded TV watching all the great hosts and just sitting back in your chair And guess what you're saying? You're doing like this. And you're just saying, I don't need a reset code, guys. I don't care. Why would I need that? I just made profit. I'm in a positive territory here. Okay, I'm just a little bit hyped up about this because I think it's super. This was actually very important for me to realize at that aha moment, which actually took me for a few weeks, when I realized that these trades, again, let me show you, these trades down there were actually responsible for losing my funded accounts and my valuation accounts. And as soon as you go into this, everything is changing, obviously, right? It's a great feeling, right, Larry? Yeah. So one more thing to this. So we're going to continue. We're not stopping here, everybody. Okay, back to FOMO. With FOMO, it's impulsive sizing. Okay, don't tell me that when you're down here, because I didn't do that as well. I'm just going to zoom in. It's more stressful when you zoom in, right? When you're down here, you enter, how much is the distance here actually? You seeing this move, the target level is 88.50 and the market is just dropped below 100. So what you have here is like maybe 10 points. Now, don't tell me that it's a wise decision to jump in with like 3 minis or 5 minis after this move all the way down there. Now, impulsive sizing comes with FOMO. So if you choose to take this trade, it happened to me. I'm talking from experience. Impulsive sizing at this point. Also FOMO. Now, what can we put on the opposite side? Super simple if you think about it. Controlled, planned sizing. Actually, these things are so simple. It's like controlled sizing. Look at that. I actually set this up for $100 of risk. So I put that. That's why I like TradingView. And this tool is very good. This is the short position or long position tool. You put in like your risk is, your account is $50,000. Your risk is $100 per trade. Look at how simple. Quantity of contracts is 1.7. Obviously, you can put 1.7. But for example, with a stop loss here, 2 contracts. Risk to reward ratio 1.18 still. Okay, so that's changing as you move your stop. But this is controlled, pre-planned sizing. Awesome, right? That's how simple. But anyway, don't get an answer. Logo, I'm sorry, I have to scroll back because sometimes I'm switching away from the chat. If you have a question, let me know or write it again because what's the max loss per day you would recommend to pass the valuation of 50K? The max loss, I'm saying $600 ish, plus minus, but somewhere around 600K. 600K, oh my God, $600, man. You see, that's the difference. I'm thinking in Hungarian. I'm trying to express myself. I'm still thinking on the answer while I'm looking at the chat. So anyway, $600 ish on a 50K account. Okay. I think that's a good mental stop. 600K drawdown. Exactly. Come on, guys. I know. Give me some slack here. All right. So $600, I think it's a fair value. Fair value. Come on, I'm really talking ICT terms here. So $600 is a good level in losses that you have to move on. If I see my funded account, any of my funded accounts, because I usually go with the 50K ones, go down 600 on the day, that's actually a red flag. I told you guys that is something that indicates that, okay, I should be stopping for the day, right? At least on that particular account. So I don't live in Budapest. Yeah, it's a nice city. To be honest, I'd like to live on the countryside. I don't like the crowd too much. So I live 90 kilometers south from Budapest. It's good to be there. There are some cool places. Yeah, it's all great, but I don't like the crowd. Not Bucharest, Budapest. Sometimes I copy trade, yes, but not all my funded accounts. Like maybe 2 accounts or 3 maximum. But you know, there you go, Abhishek. We are same. Yeah, it's this area, guys. I would definitely not go long. Yes, you can, but I'm just not gonna push the button here. Anyway, there's more. I'm not American. I'm from Europe, Hungarian. I've never been to Norway, but I like to go there, by the way. So there's more to this. There's still more to this. So the FOMO is actually fear of missing, right? But on the opposite side, like this decision here is made from fear of missing, but this here is made out of confidence in a repeating edge. This is a repeating edge here. You have the target, you have the entry model, you have the risk to reward ratio. You are in the well, this is not in the kill zone. Well, technically it is almost. So you're in the kill zone still somewhat, and you can take the trade. But let's just use it as an example, okay? You have an edge, and that's it. Okay. And why is this so dangerous? We must talk about that too. Thank you so much, Wiesen. Thank you. I hope you guys like the content. I have another topic too, but we'll see how much time we have. Oregon, nice. Europe gang. Yeah, let's go. So the next thing about this, why is this so dangerous? Why this kind of trading is so dangerous? First of all, bad habits, right? You start skipping your process. Even if you made your analysis correctly before you sit down to trade, and if you outlined your levels or what you're looking for, at this point, you're just completely start skipping your process. Worst case scenario, you're going to make a bad habit of this. I told you guys, I was asking myself at the end of the day, was my analysis correct? Yes, my analysis was correct, but my entry, I was stupid at the entry because I oversized, entered with fear. Entered with the FOMO, and I got blown up when the price got up here. And so your analysis could be still correct, but you can still lose the trade based on FOMO, right? So, and if you keep doing this, that's just going to build up again a bad habit because you start skipping the process. That's why it's so dangerous. The next thing, you enter early or size up randomly. Now, this case, I would say you entered too late because there was already an entry maybe up there. But that's an example. You enter early or too late, and because of that, you size up randomly. You're not doing the proper risk management at this point. You're really just randomly hitting maybe even too much minis just to get that few points. And again, that's dangerous, building up bad habits, right? And so the next one, you take trades just to avoid feeling left out. And that is actually very heavy because we are all driven by some pride and some ego. And at this point, even if you're not sizing up, and that's even that's somewhat a better scenario when you're still not sizing up your trade when even you enter here. The problem with that is that you're still just entering the trade because of your ego and because of pride, because you want to show the market that I'm still right. It's still going to go down. But you soon realize, even if you survive this drawdown, and that's the problem with that, you're going to survive this drawdown because you're not going to have a stop loss. You're just going to be standing there like a deer in the headlight, and you're just going to be hoping, building up bad habits, wrong decision, confusion by the time price gets here. And all of a sudden, the gods of the market are being well generous with you, and finally the price goes to your target. And that's a problem, because it's even worse, because at the end of the day you're going to say, yes, my analysis was correct, my trade was also correct. But no, it wasn't. You were just actually a little bit lucky because you survived this drawdown. So because you can cut your losses, and finally you're going to, even worse, you're going to celebrate that, hey, I was right. Yes, I only made like $100, but I was right. I let my account $600 draw down, but who cares? I was right. Bad thing. That's also dangerous. So you see, so many things FOMO can actually drive you into. You have to do something against it. And so, why is it also dangerous? Like, you lose and you start to doubt your whole strategy. And I think this is the deepest one of all. Like, when you lose, especially if you're somewhat new in trading, you lose and you're starting to doubt your whole strategy. When it wasn't the setup, it was your mindset usually. So something, maybe the problem with this is that you're starting to do strategy hopping. You're starting to modify your own strategy. You're starting to modify your risk management style. And so I think it's super dangerous again. When I lose, I just want to punch. CJ. Not the best solution, I would say so. Tom, you should write a book giving out the gems. Oh, Fixer. I am very thankful for that comment. Thank you so much. I really hope that I can give some valuable information to you guys. I always try to came prepared for my funded TV. Sometimes I'm also a little bit more energized, or maybe a little bit more tired. But when I dived into this topic today, I thought like this is a very good topic to talk about. So, also be careful on vibing too much. Careful to like get paid. Smart price. Yeah, exactly. I'm always grateful for your encouragement to me. Oh, thank you so much, Raphael. Thank you. I appreciate that. So, so again, these are the most dangerous things, and this has been caused by the FOMO, right? So most revenge trading setups and most of the revenge trades are actually caused by FOMO, right? How to fix it? Obviously, there are some fixes about these things. I'm not going to go too much detail on it. You all know the answer, but I told you guys we're gonna talk about the same things over and over with different angles, like how you fix that FOMO. Ask yourself, number one, before entering, am I acting on a signal actually, or just on a feeling? So when you want to enter here, you must ask this question. Maybe put out that sticky note somewhere or something. Like, ask yourself, am I actually entering based on a signal according to my edge, or just a feeling? That's number one. Put this sticky note somewhere, because trust me, it is going to help you. It sounds maybe super simple. Maybe you even say it's super stupid, but it's not. It's actually very helpful. Small sticky note. I use sticky notes sometimes. It's actually really helpful. So, am I acting on the signal of my edge, of course, or just my feeling? The second thing, write down the setup. You guys, I think, and I'm sorry to say this, I'm not accusing anyone particularly, so don't mind me saying this, but I think many of you guys not even writing down your setup. Okay? Can you clearly, just have a piece of paper and write down your setup with the explanation, okay? If you can clearly define your entry setup and your strategy on a piece of paper like clear check marks and everything, you have to keep that on your desk. Okay. If you're not seeing those check marks, if you don't seeing that setup when you're here at this point, when the FOMO is kicking in, then you just don't click the button. All right. So that's number 2. Number 3, I say like use a delay rule, like force yourself to wait for confirmation. There's nothing wrong with waiting for some extra confirmation until the risk to reward ratio is still good, right? So force yourself to wait for confirmation. Example, candle close, retest, the VWAP claim, I don't know, VWAP retest or something like that. There's nothing wrong by adding an extra confirmation check mark into your setup. Okay, there's nothing wrong with that. As long as you have a positive risk to reward ratio and you did some back testing and you see that the edge is still working, I call this a delayed rule. There's nothing wrong with being delayed as long as you're staying on a positive risk to reward. Okay, so give the trade time to come to you is what I'm trying to say. Okay, give your trade time to come to you in terms of those check marks. All right, it's very important. I think it's very, very important. Trading in the zone, exactly. And number 4, by the way, track your FOMO trades. I know, right? You need to track these trades. Journal it. Did I follow the plan or I was just chasing price? We need to track down these trades. You need to answer to yourself at the end of the day. And you're going to see the pattern. That's why it's important. Okay. Did I follow the plan here or here? And you will have your answers. And so just to, summarize it, FOMO says you're going to miss it, but conviction says it will come back and I'll be ready. Mic drop. All right. FOMO says you're going to miss it, but conviction says it will come back and I'll be ready. That's the big difference. So just wait for it. This is the same situation. You're looking for the same level, but with 2 completely different entries here. Huge differences. Okay. So I hope it was a good topic. This I think it was crucial to talk about this too. I have another topic, by the way. We can talk about it a little bit more. I still have like 7 or 8 minutes from my segment until Matt comes around. And so if you have questions about this, I'll be happy to answer, to use these few minutes. Risk management, analysis, trade setup, whatever. Let me know. I'll be happy to answer. So until then, there is another topic that we can dive into if we still have time. No more sticking around. Shezi, all I can tell you is stick around. The cool glasses. It's here somewhere. I have the cool glasses. I gotta wear it because, Matt also has some cool glasses, but the problem is I don't see anything with this. Actually, I see, but, here's the cool glass. And now we look like a cool trader, right? How awesome. Okay, we can use this time of the segment to look super cool. I'm your favorite. Thank you, VSN. Thank you so much. All right. And by the way, the next topic, if you know, you know. Thanks. So the next topic is actually, but we're not going to dive into that too much, but it's going to be also exciting. Also exciting. Traders who say it's just one more trade are always blow up the accounts. And this sentence is actually crucial, but we're going to talk about more of this stuff next time. Actually, I can't see anything right now. Right now it's a little bit dark here. I need to put my regular glasses back on. Okay. But I love these glasses. Yeah. It's cool when the sun is shining. So, what is a good stop loss in NQ? Well, depending on what's your setup, point wise, I can't tell you. So point wise is just impossible because it depends on your strategy, entry model, all that such. There's no simple number to say like what is a good stop loss. Or if you're looking for a level here, if you're long, well, I would put my stop. If you guys are having long positions, I would just trail my stop somewhere up to 240-ish area. There's a nice little swing point here on the 5-minute. Why give back to the market? Asking the question shows you're not ready to trade. Yeah, I mean, we don't know in what context he was asking this question. So that's why I wasn't even checking the chat all the way up there. So, but again, the next topic will be good for next time. So the traders who are saying just one more trade are always blowing up, and it has a real deep meaning, by the way. Like the most expensive trade is the one you didn't plan for. It's a mic drop line, right? So the most expensive trade is the one you didn't plan for. Never forget that. And so what does this really mean? When a trader says just one more trade, or just, let me make it back real quick, or I don't know. I know I can get green again. I know I can get green again. It usually means that they're off their plan, they're emotional, not logical. So just what we talked about. It has to do with FOMO, right? So they're off their plan, they're emotional. They lost control on the session. I did that many times, actually. So when you say that just one more trade, even by saying that, you're just actually deviating from your plan, right? Why do you want to add more trade if you're already in the green and you traded by the plan? Why do you want to add more? Or if you're in drawdown and, for example, you hit your mental stop level on one particular account or whatever. JC, hello. Where's the shade? I think I put it back because you know what? I'm gonna put it back so I can look good when Matt comes around. Hey Gabor, welcome. Just stick around. So, that also means if you're thinking of like, oh, just one more trade, be careful with that, okay? Because you can easily go off the plan. You can get emotional and lose control on the session. So it's not basically a strategy. It's like almost like a desperate attempt to feel better, right? So I'm not even talking about profit-wise or money-wise. It's like somewhat a desperate attempt to feel better. You feel that? You're just trying to feel better. It's not just because of the money. It's about emotions. So there are some scenarios when these things are happening after a loss, trying to make it back. The market doesn't care. It's not a casino. So never forget that. Or after a win. It can happen after a win. Feeling invincible, right? But you're actually going to give profits back. Or when you're actually bored. Let's not forget about that. Okay. Your accent is, yes, I am Hungarian, hungry Hungarian. Oh my gosh, Matt's viewers are actually flooding in to the chat. Okay, everybody, behave, keep calm. Matt is almost around. Man, I can't read the chat in these shades. So I just want to say thank you, everybody. Until we're waiting for Matt, I'm just going to say thank you. I think we had an awesome segment. I think we just nailed this topic perfectly. Thank you for the questions again, as always. And I cannot state that enough, how much positive energy we have here on MyFunded TV. So I'm always grateful to be here with you guys. And I have some good topics for tomorrow. Don't worry. Happy Friday tomorrow, right? So we're going to have a party or something. I don't know. But yeah, that's the, oh, look at that. Here he is. All right.
Nice shades, bro.
I told you, we must look good when he comes around.
Nice. Yeah. How's your day, man?
All good. In the green. And I'm just sitting this one out because we are in uncharted territory. So I'm not going to do anything here. Yeah.
Nice.
How about
Very nice. Green is good.
How's your day?
Same. This is day 18 of my winning streak. It's been so crazy.
Guys, this guy's is on a winning streak. Oh my gosh. Cool. Yeah. All right, everybody.
Same as you, brother. Appreciate it, man. Yeah.
Now, I'm just going to say hello, everybody, and stay with Matt's super valuable information. All right. Thank you, everyone.
Awesome. Congrats on your win, buddy.
Thank you. See you.
Man, oh man, guys. All right, I got a tale to tell. I got an awesome tale to tell you guys. So we're in green, right? As Thomas said, uncharted territory. I'm done trading for the day. Now let me show you some good. Now again, I'm doing a couple of interesting things today. Let me start off by saying, I am. Okay, let me see how I can say this. I'm trying to lose on purpose somewhere because I'm trying to aim for having room to buy accounts that I know that are coming out soon with one of my favorite props. So because of that, I'm trying to lose on purpose. Now, not the 5 and the 1 you normally see. I didn't touch my MyFunded account today. And then my other prop firm with the 5 I normally do, up in the green. Again, 18-day streak in this. My other ones, I'm busting on purpose. But with that being aside, no, I didn't blow up. Not yet. I will blow up by tomorrow, though. That's for sure. So what I did was I blew up one account to the upside as I woke up this morning with $11,000 of profit in a single account. So I made a joke about it. And let me tell you exactly what I did. So with consistency in an account, you can't really go too high, or you technically blow up your account to the upside, which is kind of bad. Now, there's tricks to whittle an account down, and I did it. So I'm going to teach you guys the trick here, if you guys would like to know how you do it when you make too much on accident. This is the second time I've done that. Now, you have to be careful because there's some rules you kind of make sure you want to know about, is that the easiest way to knock it all out, and don't do this because you might get flagged for micro scalping, is to open and close very quickly, and then you'll whittle your account down because of the commissions. However, a lot of firms don't let you do that, or else they'll flag you and you won't get a payout. So you can't just nickel and dime yourself back to zero. I'd have to make hundreds of trades to do that. But here's the trick. Here's the trick all of you guys can learn. If you want to lose an account on purpose very quickly, what you do is you go to your previous contract. So H5, or you go to your next contract. These are the two tricks you can do in QZ5. So I had to bring this account. I had to get this account closer to $3,000 instead of 11, because with 20% consistency, $11,000 on a 9,000 target means I now have to make $55,000 to get my first or my next payout. No, thank you. Right. So what I'll do on this one is there's two ways you can go about it. Is A, if you want to blow up the account in a single trade, is you open next month's contract. The bid is practically at zero and the ask is practically at infinity. All you need to do is open one contract and you'll blow up the account full port in a single second, which is easy to do. But if you want to like whittle it down without blowing it up, then you go to the previous contract and make sure the spread is big enough, and then you just buy and sell very quickly. And it took me like 5 seconds to bring it down to 3,000. Easy as that. So yeah, I blew up on accidentally the upside. How did I do this, by the way? I was really busy last night because Rocket Secure is coming out with this really awesome release. And I was working all the way through until like 3 in the morning. That's why I'm really tired today. We're releasing overnight dynamic hedge pressure estimates, which is the thing we manually do still, and it's automated now. And I was working on the test server. and doing the calculations. So last night I longed at hedge pressure like I always do, monthly hedge. I was in NASDAQ futures, and I don't know what tired Matt was thinking, but I long at my every single time setup right here at the orange, like I do every single time. Here and here, I was building a position. Hold on, that's not where I was. Wrong spot. Here we go. Here. I was longing right when we fell down to here. I longed in 2 of my accounts. One of them I grabbed 2, one of them I grabbed 3, and then I set a stop, and then I went about my day. And then right at about midnight, it started taking off, and then I was making close to like, $1,000 to $2,000 per account. I'm like, cool, that's my P&L that I want to get. Let me close out. So I went in and I exited on the phone. I closed out the 2, and I went to close out the 3. And I thought I was done. I looked and I was like, okay, I'm flat on my accounts. I'm going to go to bed. Well, what I ended up actually accidentally doing is instead of closing out the 3, I must have bought 3 more, because this morning on my stream, I was investigating how it even happened, because I got to my stream right here and I was up $11,000, and I walked in and I was like, no, you don't want that in any kind of account. As much as it sounds cool to have that happen, unless it's a funded account, or sorry, like a live account, sure, that's great. But in like a straight to funded or any other kind of account with consistency, you can't do that. You completely shot your account by making too much. And I didn't even know that you can do account limits in Trade-A-Bait. You guys are teaching me that now because I'm so new to the prop space. So now I know I can actually set profit limits to keep that from happening. Now I've learned my lesson. But I thought I was closing because I looked at my order history. In my brain, I bought 1 more there and I bought 2 more there. That's not something I would be doing. And I go, in my head, I think I was closing out 1 and then closing out 2 more and then going to bed. I was probably just like, all right, close 1, close 2 more. Okay, I'm good, go to bed. Oh, I'm flat. Okay, good. And somehow I was still in a trade when I got here this morning. And so the funny part on my stream was I logged out the door with the accounts that still can make some money. And that was really what I did. This was a pretty simple setup on NASDAQ. This was a liquidity map 1B, 1A setup. This is open, orange back to open. This is the V-shaped right there. Open, orange, open. And then at the support, could basically long all the way up to the upper band, which is this resistance line right here. And NASDAQ walked right up to it, man. It was such a clean trade. Really nice. And so the other accounts made the profit that they can make because I'm going for payouts, so I can't really make too much on them. Trying to keep those right at target. And then I got the trade out the door, and then I closed out and haven't done anything else all day, except for try to lose money in one account. So most of my stream was trying to lose on purpose. And as funny as it was, the first thing I did before we were exploring ways to bring the account balance back down was to try to just jump in on a big trade, and I accidentally made $4,000 more, just as to prove that I told you guys before that it's just as hard as it is to lose money as it is to make money in the stock market. This stuff is so random. Even when you try to get on the wrong side of the trade, you'll often get on the right side of the trade anyways. So remember, you're not losing because you're picking the wrong side of the market. All of that's random. You're losing because your position size is too big, or you are having a very horrible entry efficiency, meaning that you're jumping in at the high to long and shorting at the bottom, things like that. But yeah, even if you try to let me just lose on purpose, let me YOLO 15 contracts, it still went up. And I'm like, okay, I need to get this lower. But anyways, jokes aside, this is what was happening. Are we going up or down? We expire tomorrow. Monthly expiration is tomorrow. In equities, VIX expiration was yesterday morning, so we're kind of floating into that final run into close. I don't think we're going up much further from here. This 276 level is the limit, but the S&P still has a little bit more room to go because it hasn't actually touched its pivot yet. And S&P still has room to go up to there. So I think we still go up. I don't think there's any selling pressure. And we should be all right. But other than that, yeah, market's been good. Market's been cozy. We've been going up. And yeah. But the consistency rule, though, that is a little bit of a trick. And so sometimes sometimes you want to, tailor your trades, and that's the strategy. Unless they tell you can't do that, then you can do it. So there's no rule against losing. Is there a coupon? Hello there. Is the coupon YouTube just for one-time use? I believe so. That's the 50% off. Yeah, it's just one-time use. But that's the funny story about today's stream. There's always something interesting on my stream going on, and we have a good time all the time. But so just to let you guys know, the other firm, the one that usually appears up here, that account, once I got wind of the sale that's coming out pretty soon with that firm, the accounts don't count on reset. To get the conditions for the new account, you have to go out there and get them fresh and brand new. So I need to clear up space. So yeah, so that's a purposeful blow up. And I told people in my stream yesterday I was going to do it on purpose. So it's no longer counting towards my day-to-day. Instead, I'm going to get the new accounts and rip those. I'm excited to get them because I like when prop firms have deals, but also deals with different types of accounts. Not just like, here's a 30% off or 50% off or 100% off sale. It's more like, check out this firm. We're going to get rid of these couple of rules and have these accounts are special with no rules. And okay, let's grab it. I just made everyone take. So anyways, yeah, so trying to lose money. So the question was, we were trying to guess, how can you lose money in the stock market if you wanted to? And it was a very cool conversation because when you thought about it, what I was trying to do as an example was, can I pick a trade that's losing? And we use it as a learning experience. That's why I want to tell you guys this. It was a learning experience because we actually sat there and we chewed on all the evidence we had to try to come up with a losing trading plan on purpose. And so to tell you guys in general, is it easy to pick a losing trade? And is it harder to make a losing trade plan than is a winning trade plan as an investigation into how random the market actually is? As a matter of fact, as the market was moving higher, we found it nearly impossible to come up with a losing trade plan. The only thing that we could kind of come up with was we need to short the market at the highs. That's basically it from here. Now, one of the things is that I have really strong pivots that are likely to hold. If I were to break my really strong pivots, I can chase a short in a crash and maybe, or long in a crash, and then I can lose on that. But the idea was, how is the question that came up was to kind of prove that because you're losing, it's not necessarily because you've picked the wrong direction. And usually, because when you pick any direction, half the time you win or lose outside of your control. I just full ported 15 contracts to long at the top, thinking, okay, we broke out. Let me go ahead and long. And then that still made money. And I'm like, okay, so it's not really why traders are losing that they're picking the wrong direction. Traders are usually losing because of two things. And this is kind of what we came up with. There's a really awesome conversation. This exploration was really great. The one reason people are usually losing is not that they're trying to fade the trend. It's they're trying to short a bull market, a specific fading the trend. They're trying to short a bull market. This is very hard to do. As a matter of fact, in the probabilities, and we teach this in our boot camp, it's more likely and more probable for you to make money chasing a long breakout than it is fading a long breakout, because 70% of trading months are green. And in our confluence of our big three rocket scooter indicators that we look at for greater market, when they're all bullish, which they are today, 70% of days are green. So not only are 70% of months green, but 70% of days are green. And so with that being said, it's just more likely probable if you were to like throw a dart at a dartboard and pick long or short, that longing is the appropriate trade to randomly take. Therefore, if you're just trying to like, I need to lose a trade, you should always short, because shorting is less probable than longing. Okay. So number one, the reason traders mostly fail because I can't even pick a losing trade if I try, because it's hard to lose on purpose, just as hard as it is to win, maybe even harder. But if you want to lose on purpose, then what you do is you need to short a bull market, not try to long a bear market, because again, 70% of days under most conditions will be green. And under all conditions, when I don't have confluence, 50% of days are green. Even in bear markets, go count. Last bear market we had, half of your days are green. So statistically, shorting is a way to lose. So we were kind of come up with ideas on how can you lose if you want to. Shorting a bull market, shorting when you should be longing is how you can lose. And number 2 is betting too big. And this is what makes people lose the most. It's just betting too big. And you're going to lose money by betting too big, either A, through losing it through commissions or drawdown. And when you bet too big, here's how you lose a trade. And I'll tell you why statistically, this is why you're losing. And this exploration was to find out why you're losing as a trader. Because if you're trying to lose on purpose, you really can explore how you lose on purpose, because if you're accidentally winning, then you're doing the right thing when you're trying to discover what the wrong thing is. And betting too big, right? If the market sits flat and you have a daily loss limit, which stops you for the day, 3 things can happen. Either A, the market, you say that you pick the long, which is the right thing to do most of the time, and the market goes up. Okay, in this particular case, you won some money, right? Say in this particular case, the market fell and crashed. Okay, well, this particular case, you lost money. So you won here if it goes up, you lost money if it went down. But the DLL stopped you from further loss. Okay, that's cool. You could have lost a whole lot more, but the DLL kicked you out for the day. It's a losing day. Okay, but there's a third case that you don't really think about too much. It's that you hit DLL, but then you were right anyways. And so this is kind of the third condition, is that you picked the right direction, but you picked the wrong place to enter from, and therefore your entry efficiency was bad. And while you were right on direction, you were wrong because of some kind of limitation, and therefore 2 possibilities to win and 1 possibility to lose in this particular setup. Because you bet too big and your efficiency was bad, which is number 3, which means you entered at the wrong place. This is why you lose. And the exploration today, and the reason I told you guys this story, was an educational experience. Efficiency was bad. Let me explain efficiency to you guys. Trading efficiency means entering at the right place, and therefore you're right from the right place and wrong from the right place. It's very important. Longing here could have stopped you out even though you were right, but longing here would have made sure you were right without stopping out. Right. And so trading where volume can be, which is what we teach, is how you up your trading efficiency. This is very important as an educational experience. Longing where high volume pivots will be. One of my favorite high volume pivots is this orange line on my screen where volume can be. And that's where I longed today. So my efficiency is high because I didn't long here, 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 here. I waited till there to long. And therefore, I know that I'm wrong very quickly. And therefore, if the market goes in my favor or goes against me, I know very quickly if I'm right or wrong. And so because my efficiency was good longing from here, I can actually either be right randomly or be wrong randomly. But the key is, and somebody told me this is the best thing they've ever heard me say, is that the idea of longing here is more important than picking long or short. It doesn't matter what I pick, that's pretty random. But because I traded at the right place, then I'm either right from the right place or wrong from the right place. And that last thing I said, people have said, is the most profound thing I've ever said as a trader. Being wrong from the right place means I cut my losses quick. I'm out quick. I know I'm wrong quick. And I'm not wrong because I got in at the wrong spot and had the direction right. You have to also battle the fact that you hit a stop before you're right. This condition is why most of you are losing. This one right here. Because you longed at the wrong spot or shorted at the wrong spot and you stopped before you're right. People just think trading is up or down, but it's not just up or down. It's up or down or up, but you can't trade it because you were kicked out, because you stopped. You don't have money left. And the efficiency is the big reason people lose. So betting too big just means if you're inefficient and you're betting too big, you're going to stop faster. So these are the reasons people actually lose trading. So if I try to lose on purpose, then what I need to do is wait for a bull setup and short it. And I need to bet too big and then not bet where there's volume. And then that's how I can lose on purpose if I want to try to lose, right? So this is kind of the education like that I want to give you guys today, is that why do traders actually lose was explored through. I always try to like take everything that I get as a chance to teach. And waking up today with $11,000 profit in one account where I'm like, oh God, I got to lose now on purpose. Let's turn it into a game and let's go out there and explore it. on purpose. So I did the wrong thing. I didn't do the wrong thing on purpose. I just rolled the dice while we were exploring. And I actually longed on the breakout because I'm like, what you guys would normally say is, you know what? If the market breaks out, a lot of times people want to short it, and shorting is actually the wrong answer. Longs tend to stay long. And so by me chasing the long at the top with 15 contracts, I ended up making $3,000 more dollars. Even doing what normally on the surface, most traders would be like, that's the stupid thing. It's going up and up, and we broke out of highs. Maybe we should fade it, right? That's the first inclination people have. But in reality, long breakouts are more likely to keep going than they are to fade. So the appropriate way to lose on purpose is wait for a long breakout and then short, because it usually keeps going. Bull markets stay bullish most of the time. Bear markets reverse most of the time. Markets don't just usually have giant red candles that fall and stay low. Volatile markets have a lot of long opportunities because there's big choppy V's in it. Bull markets, the easiest way to lose in a bull market is to short in a bull market, because it is the hardest, most horrible feeling in the world. See, if I were to long right here, let's talk about yesterday. You guys remember yesterday, I took a $16,000 trip that ended up being a $200 win by the end of the day. You guys remember yesterday's crappy, weird trading day that I turned into a win by the end of the day? Okay. If you're long and you're wrong because of a tweet or something else, you're wrong pretty quick. Your loss is pretty big. You close out pretty big. And in like 1 minute, you lost a lot. It feels like a slap in the face. Okay, so that's not really that bad because it doesn't really hurt your confidence as much as shorting in a bull market. And what happens in shorting in a bull market, and I'll tell you guys the feeling, and tell me if you guys have felt this before, right? Not saying that shorting doesn't pay out. Shorting and longing both pay out. But if you pick the wrong kind of short, the hardest thing in the world is like it hits the high, you try to short, and what ends up happening is you're like slightly upside down, and then slightly upside down, and then more upside down, and then you're like barely losing, and then you're barely losing a little more, and then losing a little more, and then losing a little more, and then it starts to feel big. It's like you're inching your way worse. It's not like all at once. It's like little by little by little by little, and every 10 minutes you look at it and you feel a little more sick to your stomach, a little more sick to your stomach. And then every time you get like, you know, a red candle or two, you're like, okay, maybe this is the one where maybe I'm right. Okay. Okay, maybe it's going to sell off. Maybe it's going to crash here. Oh, no. Oh, it's still going. Okay, maybe now. Oh, no. Oh, no. And then it's like this, and it goes to another tier and then sits there for an hour. And then goes to another tier and sits there for an hour and goes one more time, sits there for an hour. And it's like not a slap in the face like when you're wrong quickly on the long side. On a long trade, when I'm wrong, I just take the loss and get out of the way quick if I'm long at the right spot. But if I'm trying to fade a bull market, which is most of the reason why people lose trading, is they try to fade a bull market. It not only loses by the end of the day, but also beats you up mentally because you're stuck in a position and bag holding for like hours and hours and hours, and it just gets slightly worse and slightly worse and slightly worse. And then it hurts a whole lot more the next day. So psychologically, one of the reasons traders lose more than anything is not just picking the wrong side of the market, but specifically trying to short a bull market because it completely destroys your confidence. And you come back the next day just beat up. It's not like you just got slapped in the face. You took like a 9-round beating where you just got punched slowly and softly in the stomach 1,000 times. And that's like a deeper bruise. It hurts a whole lot more, right? So if you guys understand, the reason why traders lose is mostly because of psychological reasons. It's not just you pick the wrong side, but specifically the loss that hurts the most is not the loss I took yesterday. I actually worked my way back. That was quick and painful quickly, but the pain was over pretty quick. On the long side of the market, when you're buying dips and you're wrong, you're pretty long quick, and the loss is big, but it's not like I'm bag holding very quickly. I'm good at pulling the plug quick. But losing slowly over time is something that not only hurts you today, but it'll hurt you for your next 2 or 3 days because you'll still feel weird when you wake up tomorrow. So today's exploration, I said, you know what? I'm going to try to lose on purpose and turn that into an educational event on the stream while simultaneously trying to keep the streak going, which I'm on an 18-day winning streak if you ignore, at least in this one prop firm down here. So ignoring the accounts I'm trying to purposely bust for other reasons. But that's So that was a fun day today. Let me lose one account on purpose and win the other 4. And see if we end up with the streak still going. That's pretty fun to explore perfect control. The orange line is hedge pressure. So hedge pressure is a gamma exposure based model that uses options to find high volume pivots and futures. It's a whole different thing that we created here in our team. And I use it to find volume pivots. It's basically volume pivots, yeah. My live, I didn't touch. My live, I did not touch that today. This one was 0 still. So my live, no trade. Although I did want to long it, but the only reason I didn't long is because I was up till 3 in the morning and I had to start my stream like 45 minutes late. And I'm like rushing to get there. And by the time I get to my stream, I'm like, oh crap, I'm up. Oh, what? So I had 15 minutes to prep. And so my first thought was like, okay, let me get ready. So I was a little fumbled today. I did want to long in my live account more than anything, but I just never did. No reason not to, other than I just basically fumbled at the start. But so, right. So the 3 rules, just as I'm going to review, is the reason you guys usually lose trading is that you're on the wrong side of the trend. But you're on the wrong side of, like, the long trend is what hurts most than being on the wrong side of the short trend. So psychologically, you take a beating, you don't even know it. The other thing is your entry efficiency is bad. You either chase to get in on the trade and you take a stop before you were right. Entry efficiency is really bad on the short side than it's on the long side. Remember, long side moves tend to become less volatile as they go up. Today's a great example. Volatile, you could just explain as like the V's and the dips that you get. The more volatile it is, the bigger the V's are. As the market becomes more bullish, the volatility is less. The V's are smaller. The V's are smaller. The V's are smaller. You guys see that? It's like tiny. It was bigger here and then it's smaller there. Bull markets tend to punish you less by longing at the top, just like I did today, and that made money on accident because there's no volatility as markets get more bullish. However, so essentially you can be inefficient in a bull market by chasing a high to the long side, and more often than not, you're actually not even really punished for it that much. Your dips are much worse on the bear side, as bear side becomes more volatile as the market gets lower. So imagine shorting at the low and all that drawdown you take before you're wrong. So trading efficiency of shorting at the wrong place is worse than longing at the wrong place. So the 2 things to repeat, you guys usually chase, or you're on the wrong side of the trend, but you're on the wrong side of the long trend most of the time. And that hurts more than the wrong side of the short trend. The other thing is that your trading efficiency is bad, especially when you're trying to short, especially when you see red and you're trying to chase shorting at the bottom. So this is what you do. For rules of thumb, no shorting at tops on bull markets because it usually keeps going. No short bull. The other thing is no short low. So where do you short, right? So because of these 2 things, no shorting lows on reds. Don't chase shorts. Don't chase shorts that continue to break out because the volatility usually what gets you. So where can you short, right? And the idea comes down to only a couple of places I do short from, and I have a handout that goes with that. And the other thing is you're betting too big so that you usually squeeze out due to your inefficiency faster. So it's like, where do you short, right? And there's a couple of places I do short for certain reasons. And the idea to short markets is that you're betting that you see something that most people don't see. I have very specific shorting criteria. And it's done me well. Again, it's not investment advice. But the idea is it means just the example here is you have to be very picky where you short from. Because statistically, if you short in the wrong place, this is why most traders fail, is you're shorting at the wrong place and time. Most of the time, if you just like aped into anything long randomly, it's probably going to make money most days. And that's really a lesson I do teach statistically. It doesn't mean that you should do that. And it's not investment advice. But literally, just like ape into something on the long side and diversify, and you'll make money over time. Your 401k has the same trading strategy. But I only short under specific conditions, and I need to have confluence that lines up with those conditions as well. I'm going to usually, the upper band here is a short setup I do take to bet that the market doesn't continue to break out and become irrational to the upside. This is a future structure thing, and usually that structure doesn't break. And as you see, there is some kind of resistance here. But I usually only take that short if I can see that the stocks themselves are bearish, which right now this indicator says they're not. And usually I don't take shorts unless I have confluence. I need the stocks to be bearish and the index to be overpriced. And therefore I'm shorting because the index needs to fall to catch up with the stocks. And the same thing for these other two. Bear zone top, I need the confluence of stocks either selling off in all three of these cases. The only other time I do like to chase a short is when that bull structure on monthly hedge pressure does break. And this line is usually nearby and tradable up until like the last 2 or 3 days of month. So today, tomorrow is the last day of the trading month, and this orange line is in the way. Now, if I were to break the orange line and then bounce off of it, I can take a short there for the market to collapse. What I don't do is try to time a top. And ultimately, you will be right if you get the top right and make a whole lot if you get it, but you're going to be wrong most days along the way. And I learned over my career that I started getting so much better as a trader when I stopped trying to doubt highs and stopped trying to doubt the bull market, stopped trying to doubt anything. You guys know me. You haven't seen me press the short button in months. And even today, I'm longing at the open. I mean, isn't that cool for me to have that amount of clairvoyance to continue to trade on the right side of the trade? Because I'm never trying to fade a bull market. And then maybe one day I will be wrong and I'll long and they'll eat my lunch and I'll lose 20K that day. Well, whatever, you know, it's like part of the game is to be wrong sometimes. And the idea is not to try to guess the end of a bull market. It's not like people think bull markets and bear markets are equal and opposite things, but it's really not. You have more bull days than bear days almost all the time. And we can count it, as I tell you guys, in Rocket Scooter's indicators are greater market are all bullish. 7 out of 10 days are green. That's just what we count in our back test. And that was the last back test. Let's do it again live. Ready? Let's count the red days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. And then let's count the green days, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 20, 1, 2, 3, 4, 5, 6, 7, 8, 9, 30, 1, 2, 3, 4, 5, 6, 7, 8, 9, 40. And so in this particular case, you can see that 66% of days are green and 33% of days, this is roughly a third, are red. And so because of that, my indicator that I told you is about 70% of days are green. That's actually not wrong. I actually haven't counted the candles since then. It's good to see the stats are still good. So most of the time when the indicators line up, 70% of days are green. When they don't line up in a bear market, 50% of bear market days are green as well. And you may not have ever thought that. Even when markets are trending down, go ahead and count these. I can do it for you guys and have some fun really quick. We got some time. But let me pick from high to low and prove to you I'm not just making this up. Let's go from high to low. All right. Watch this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 20. 1, 2, 3, 4, 5, 6, 7, 8, 9, 30. 1, 2, 3, 4, 5, 6, 7, 8, 9, 40. I'm put a 4 so I don't forget. 1, 2, 3, 4, 50. 1, 2, 3, 4, 5, 6, 7, 8, 9, 60. I'm sure I'm missing some. I'm counting fast. 1, 2, 3, 4, 5, 6, 7, 8, 9, 7. 1, 2, 3, 4, 5, 6, 7, 8, 9, 8. 1, 2, 3, 4, 5, 6, 7, 8, 9, 9. 7, 8, 9, 100, 8, 108. And just to kind of show you then in a bear market, right? On the surface, you look at it, market's going down, market's waving down, lots of red, lots of green. But check this out, right? 2, let's count them 3, 4, 5, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. 1, 2, 3, 4, 5, 6, 7, 8, 9, 30. 1, 2, 3, 4, 5, 6, 7, 8, 9, 40. 1, 2, 3, 4, 5, 6, 7, 8, 9, 50. Kind of neck and neck, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 60. 1, 2, 3, 4, 5, 6, 7, 8, 9, 70. 1, 2, 3, 4, 5, 6, 7, 8, 9, 80. 1, 2, 3, 4, 5, 6, 7, 8, 9, 90. 1, 92. Okay. And you might have thought, which is so crazy, is that the bull market was about 70% green. You didn't know that a bear market is 50% green. And this was such an eye-opening realization that I had as a trader. Okay, this is roughly 50%, almost half, right? Isn't that crazy? And I learned that in almost all instances of markets, there are always bull opportunities and there's always green days, even in the downside. If you were just stand really far away from this chart and describe what it looks like, you wouldn't say that it looks red, right? You wouldn't say that this looks red. You would say it looks like it's going down, but this looks like Christmas lights. It's a bunch of red and green together. Like, look at this. It's not really, there's red in here, but there's just as much green as there is red. And even the reds have wicks. So bear markets are like volatile and both sides win 50-50. You can win both sides very well. But there's not like a statistical place and time where just the market just falls. Maybe during COVID, right? And maybe during a market crash, but they may only be like 2 or 3 weeks of that. And then the rest of the COVID fall was red, green, red, green, red, green, red, green. We forget about this, right? We think that COVID, the market crashed, and it did. It fell low pretty quick, but there's just as much green at the end as there was red, and just as much wicking as there was on the downside to rally the market up. Crashes and market crashes are so short-lived, you almost should never bet on them. You should never bet that they happen. Like even in 2008, the market crash was really crazy because it wasn't really, this is NASDAQ, let me show you S&P. It wasn't really crashing for most of the downfall. The market really only crashed for like maybe like 10 or 12 days. And we forget about that. We tend to think that, let me go to a clean chart and show you guys one more cool thing. Got a little bit of time here. Okay. So if I'm looking right here, if you look on my screen, let me go all the way back to 2008. Show you guys one more cool lesson here. Is that while it looks like the stock market was crashing over a long period of time, it really wasn't crashing until here. As you see, before I go into this part, you see right here where like the market was just kind of like gently trading up and down. Go count the candles. Again, it's probably 50-50. It was the mortgage crisis that led to the first part of the bear market. But if you see right here on my screen where the price dropped really quick, does everybody see this? Like I'm circling right here. This is very important. You guys pay attention. Right here, where the crash actually happened. You guys see right here where it's dropping? Making sure y'all are paying attention. Anyone? This part right here. Market crashed and dropped very quickly in just a small period of time. Do you guys know what caused the market to crash? It wasn't the housing crisis. Anybody know? Why the market dropped so quick? But serious note, and keep talking about the lesson. There's your code. Go get it. 50 resets. Nice. It wasn't the mortgage crisis that caused the market to fail. It was the banks fail. It's the market that crashed. It was the banks failing that caused the actual crash. Other than that, most of the 2008, 2009 was like as much green as it was red. It wasn't like the market was just falling straight down. So let me to like the belief system that a lot of times we just are always trying to doubt what we see and fade what we see and try to bet that what we see is not real and the market's going to fall. But then when you look at everything like over time, you just see that the market exponentially rises over time, and it kind of always will. I've got a log chart on my screen right here. Let me put it back to linear here. Markets just exponentially go up. So it's like I don't just doubt bull markets when I see them and try to bet on the top. But if I do short, I need to make sure I short from somewhere for some reason. As I told you today, this is a short setup with good confluence. And I'm just not taking it because I don't have the confluence. But the fact is that if I waited for the right place to short from, this band is always high volume. It's like it's a CME group thing. And as you see right here at the top, there is volume at that band. I'm always going to be shorting where volume will be if I did want to short. So I don't just kind of like hold because something broke out and say maybe it's going to fall. I need to wait for something to happen and then bet that it stops going up there. So shorting is the thing that you have to be double efficient at. Longing, you can just ape into something at the high. You don't even care. Just jump in like people did with GameStop. Just get in on it, right? And longing tends to reward that. Shorting punishes you both ways. If you short, it has to be from the right spot. That's the lesson. If you short at the bottom and chase a short, you're going to come out bad because of the volatility. If you short at the wrong place, you're going to come out bad because it's going to cut you 1,000 times and whittle your account down. Shorting means you have to be absolutely as precise as possible on a high volume pivot that you know is going to have volume, and take a strong bet there with confluence, right? Longing, you can kind of just stupidly long the market and make money most of the time. So hopefully you guys like this lesson. Today's Matt's Got to Lose on Purpose was an exploration into why traders lose to begin with. And hopefully this is helpful info for you guys. Longing tends to reward the stupid. Shorting tends to reward the highest IQ in the room. And you might think that longing and shorting are just opposites of each other. Longing is the easier thing to do because there's not as much volatility. There's not as much punishment when your efficiency is bad. Shorting, you have to kind of be an expert. It's two totally different types of trading. Longing and shorting is not like, well, I long it goes up, I short it goes down. Well, no, there's volatility and all kind of stuff you're not even considering. Shorting is like playing guitar. Longing is like playing a trumpet. They're two instruments, but they're not even close to being like close to each other, right? So hopefully you guys are enjoying today's lesson. If I were to fade or short this, I would have shorted off of this green line because I know there's volume. And again, when it comes to shorting, it has to be somewhere where there's volume, and only somewhere where there's volume. And as you see, this is the first time there is a little bit of a pullback, but my confidence is very low that it pulls back far because the stocks are still very bullish, and they don't usually bet against a bull market because most bullish days don't really have wicks on the top. And this is my last little lesson for you guys on the bull side of the market. And this is kind of from our boot camp because we teach people about entry efficiency and all that. What you might notice about bull days is a lot of them don't really have big old top wicks on them. Bull tends to stay bullish most of the time with tiny little wicks, right? But bear markets have really big wicks on many of the red days. Even red days like to recover a whole lot, right? There's always willing buyers most of the time. And the few red days there have been, they still keep going, right? There's wicks, very big wicks. So it's very rare that you see this type of candle. If you guys like candle theory, this kind of candle is rare. And it's a rare transition candle that you don't see a lot. I don't know what these things are called because I didn't really study candle theory, but this, where the market rallies and then dumps and stays flat, you don't really see these a lot. It's rare that you'll see them, maybe spinning tops, or I don't know whatever they call it, but you don't see a lot of bull days fall back to open that much. It's not a common candle that you see. And that's the reason for that psychologically is because bulls don't let go of the market that easily. And you can go on any bull market and you're not going to see this candle show up a lot. It's just a trick. You know, you can look and you can count as many bull days as you want. And you can say there's not really that many of those. And when you see days like that, that's usually an indication that something's going on. I mean, I'm trying to find as many as I can. There was one, maybe two, maybe three or four here. You don't see it a lot. Where the market rallies and just dumps and falls flat and open. I mean, there's maybe like 3 or 4 over the course of half a year. And so what a lot of you guys are betting on, if you're trying to just randomly short a bull market, is you're literally betting that we open somewhere and we come back down to open, right? You're actually betting on a candle that doesn't really exist that much. So remember, bull markets don't really top wick a lot on the daily. And this is a really good understanding and how you actually are really kind of behaving in the market. Doesn't mean I'm telling you guys perma long. That's not the case. What I'm saying is longing, shorting means you have to be extremely precise on where you pull the short trigger. If you short too low, you're wrong. If you short not high enough, you're wrong. Shorting, you need to catch the top. You gotta be really good at doing it. So, oh, wait, you guys, there's something going on in chat here. You guys are having a fun time in chat. Oh my gosh. Oh my gosh. All right, you guys. some bad juju. I'm not even reading chat. I'm on a teaching tangent here. Well, hopefully you guys like the lesson, and whoever in chat's, go talk to somebody if that's how you really feel, kind of don't be, mental health is very important, especially in trading, right? It's a stressful environment. Switching to perma bull. No. It just means when you're bullish, when you're bearish, you got to be 3 times as good at trading as you are being a bull. That's all I'm saying. Bearishness is a master class once you've already mastered being a bull. It's like going to med school and then going to be a surgeon and going to surgery residency. Yeah, general medicine, but then you have to go to a whole nother advanced practice. Shorting is a whole different style of trading. It's not the same. And that was the lesson, is that it's not equal and opposites. Shorting is very hard to do. You have to be more precise. You have to take volatility into account. And you have to trade smaller and wider bets because volatility and the V's are bigger. And you cannot chase a low because even red days have big wicks at the bottom. Chasing a low is very dangerous, right? You have to trade. You have to know exactly why you're shorting and why, and where and why. You have to have a very good reason to do so and very good confluence. And I always take smaller bets other than my long trades, which are bigger bets, because short trades are more volatile and they tend to fall faster. So I don't need to put as much risk on the table. So anytime I'm shorting, it's always a smaller bet. It's always at a very extreme place where I know there's pivot. And then it's going to be smaller position. Like the example is, if I were to take the long off the same really high probable band, I did this with like 3 or 4 contracts on NASDAQ. If I'm shorting up here, I'd short it with maybe 1, maybe 2, like half the position or less. Mostly because I don't need a lot. Sell-offs happen really quick and they're drastic. So I don't need to be very heavy on the risk to inch higher against me with a big hand, right? I just take a small bet and know that it's volatile and I'm betting on some quick volatility. And my last advice about shorting is you need to be out of trades very quick. The last thing I ever do is I short the market and hold and say, ooh, it fell. And ooh, it fell. Okay, let me hold for more. And then I just bet that the market dies out. A little more rare than anything. So most of my short trades that I do take, I'm usually trading. And when I get that big old red candle or something in the middle of a bull day, I'm usually closing out very quick. That very first wave that starts consolidating is usually where I want to get out of the trade. So my timing on a short trade is very small. Like I'm in and out super quick. And my timing on a long trade is usually longer. And as I started trading over time and kind of tailoring a good strategy for both longing and shorting, I realized that they're absolutely different from each other. And if you guys are just like, you got the same indicator and it crosses this way and crosses that way, and one time you push the red button, one time you push the green button, you're not really mastering the components of what shorting actually is and what longing actually is. They're 2 totally different styles of trading. And you have to kind of learn each one of them separately, just like you're learning 2 separate instruments. All right. So hopefully this is a cool lesson for you guys. I was talking in my stream today, I was like, oh, I'm going to bring this lesson to MyFundedTV. So questions you guys have about that or anything, make sure you really, really study your short side entries and find the mistakes you're making there. A lot of your losses are going to be attributed to inefficient shorting. And I'll be honest, doesn't mean be a perma bull, but means your shorting game is off a little bit. And work on that. If you got to find a place to start analyzing what you're doing wrong, try to say like why you're shorting and where, and see if you can't get better at that on the short side trades. Are you chasing lows? Are you shorting on the first breakup? Are you shorting on some kind of technical pattern that tends to break against you a lot? Like, what are you doing on the short side that's wrong? You're usually not, a lot of people aren't really longing the market wrong. Longing tends to reward the stupid. And that's what I tell people. You can just kind of sometimes luck in the longs more often than you can, because the market tends to just go up most days. And you don't really have to put as much thought into one than the other. Can you see more about that indicator? Yeah, so it's automated. Rocksuiter platform automates this. It's called Liquidity Map. And what Liquidity Map does is it uses different types of options analysis techniques to extract from the options order flow information that can be useful for futures traders. Pivots, gamma exposure levels, and bull and bear zones are places of high activity and volume and liquidity. So when you piece it all together, the arrows off to the side are showing me the general direction of the trade, because that's the general direction of the hedging flow. And for example, this is where the open price is this black little diamond. And this says basically, if you convert it to a sentence, if we open and hit orange, it's very likely to bounce on orange if I have confluence that goes with it. And that's what we saw today. It doesn't mean that it's going to predict the stock market. It's just showing you the native flow direction. Generally speaking, and people always kind of jokingly ask me to draw a fan because I'm always drawing a fan on my chart. But a fan is like hedging wind, if you may. It's just like a little gust of long pressure that just exists there due to hedging. Hedging is just people longing the market and shorting the market to balance their options risk. And because above this orange, there's a lot more longing than shorting, then with every trader that's not doing anything, there's just like a gentle longing push that's kind of edging the market like slightly higher, inching the market slightly higher, with all things being equal. No news, no sell-off, no anything. The market just tends to like drift away due to delta hedging. And so Roxy is explaining that technique, is understanding that the market tends to, you need a lot of volume or a lot of activity to break through to the other side of these. So orange is like a reversal pivot every time. Unless there's news to break through it, then it's called like an event, then I get out of the way on it. But so this is showing me high volume pivots and flow direction based on options neutralization. It's a whole different thing. And then I convert those pivots to Nasdaq futures, and then I'm trading on them here. So today, the trade setup was just like it shows me here. Open is there. If I open, if I hit orange, if I take a long, I trade back to open. If it supports at the open, it goes to next resistance. So open, orange, open. If it supports the open, it goes to next resistance. This is a textbook sort of long day. You see these a lot. And this one was quite easy because the bounce point was like a minute after open. I just ran right to it. Yeah. Market can't help itself from edging, baby. Yep. What are my thoughts on VWAP? VWAP is good. Anything that uses volume is good. VWAP is here's where you take a bet pivot. Like VWAP helps you isolate your efficiency in a better spot. Like I bet here, this is where I need to make a longer short. Never give you directional bias. That's the one thing I do teach about VWAP. It'll say like, okay, we've touched the VWAP. Now is where I finally bet. I'm going to bet here because VWAP usually consolidates with price at or inches on price at a consolidation. So you're usually betting at that spot, and usually you're betting in continuation of the trend, which more likely is going to be more favorable to the long side and have more probable like wins if you're longing and less probable wins if you're trying to short off of VWAP. Because again, most days are long, but VWAP is very good at telling you this is where you make a bet. But it's not going to ever be good at saying you should long or short, right? So VWAP is a great place to kind of clue you into, a volume pivot, as many traders do trade at VWAP. Therefore, it's very self-fulfilling and does create some activity. So it's a pretty good indicator to use as I always call it different kind of indicators. There are directional indicators, there's arbitrage indicators, and there's actionable indicators, or where you should trade from indicators, precision indicators. So an example is DD band is not a directional indicator, it's a precision indicator. If I'm longing, this is where the first resistance maybe will be. So let me just close my trade, whatever. What's the probability that it breaks or it doesn't? Well, 96% of days close inside of here, but it doesn't mean I short for a big sell-off. But because it's more probable to not go further than here, I exit my long there. Precision, right? I'm not trying to guess up or down on this. It's just like, here's going to be volume. Let me exit the next volume target. And VWAP will serve a similar purpose. When you approach it, it's like, okay, here's a volume pivot. And now we're consolidating. Oh, let me get out of my long. Or let me take a short from here, right? So it's more of a VWAP's more of a precision indicator than anything. Hopefully that makes sense to you guys. A lot of technical indicators, especially charting overlays, aren't what's it called? Volume profile are kind of in that same boat. Volume profile is also a precision indicator. It doesn't really assist you with direction, but it kind of shows you trade here. Either make your choice, whether it's long or short, you're here. And those are very important. Those are the most important kinds of indicators because they are telling you your efficiency. Again, as I circle back to the first thing I said in the lesson, it's being wrong from the right place and right from the right place. It doesn't matter if you're right or wrong. I get the trades wrong just as much as anybody else. 18-day streak doesn't mean I got a crystal ball, guys, and I can predict the stock market. That's for damn sure not the case. I can't predict this thing. Nobody can. The stock market is 100% random. But how do I go on streaks? So my efficiency is really good. I am absolutely wrong, if not more than you guys, maybe right as just much as you are. There's no difference between me picking the direction, right or wrong. I am more long biased than short biased in a bull market. Maybe that gives me a little assistance, but that's not why I'm making money or doing this. It's because I'm trading at the right spot. And when I'm right from the right place. But when I'm wrong, and that's the key, I am wrong from the right place. And that's very important. You get efficiency down pat, your losses are small. People are like, keep your losses small and let your winners ride. Well, how do you even do that? You need to be right from the right place and wrong from the right place. If I were to short, because I picked here, that's the right place. Here, this is all the wrong place. If I'm right or wrong, don't you want to be right? Like pretend you didn't take a trade here, right? This is not investment advice, but pretend you take a trade here. If you were shorting exactly at the right place, heck, it's the one that's looking the best so far, even though it may not work out. I'll know pretty quickly if I'm wrong because only 4% of days break out. And if I'm on the wrong side of a trade in a low probable move, I'm always out of the way. If something is so probable that doesn't happen, then I get out quick because the low probability thing usually moves very fast. So I'll know very quickly if I'm wrong because I'm making my trade from the right place. And so when you're wrong from the right place, your efficiency gets so good that your losses are smaller than they were before. And your wins are bigger than they were before. And naturally, your stats start getting better. And what is the right place? It begs the question, what is the right place? And the right place is anywhere where you can find trading volume in whatever way you can find it. VWAP and volume profile, rock scooter tools, a lot of stuff that finds volume allows you to isolate just a few places of importance to trade from. And it gets rid of a lot of that FOMO that you're always trying to find a move. I've been comfortably sitting out all day. Market was falling. I took a bet here. Let me just join the flow. Maybe it'll bounce. Will it bounce? I have no clue. Nobody does. But let me take a bet there. And if I lose this with my 40 points, I'll lose $800. Okay, I'm fine. And then I got my trade, and then I'm out, and then I'm on the sidelines, and I'm not fighting with it all the rest of the day. Heck, I could be fighting with it just like yesterday, and then Trump can tweet something. The more efficient you are, the less time you spend in the market, and therefore the less bullshit things like Trump tweets happen to you. And all of a sudden, the more efficient that you get, hopefully, and it's not a promise, can't promise you any kind of returns or anything or better performance. To be honest, I can't promise you anything, but at least in my boat, for me, being more efficient naturally helps you in thousands of ways. You dodge more bullets in the market. You dodge more crap in the market. Your losses naturally become smaller. So start looking for volume, you guys. This is the trick. And this today's exploration as to like why traders lose was like, oh, this would be a great lesson for the Fund the TV guys. So hopefully y'all like that. This is part of my boot camp, by the way. This is kind of like class 1 of the boot camp, but yeah. Beautifully said. Well, thank you. Try to be more efficient in your entries. Don't just let upward and downward candles be like, oh, let me take a move. Looks like it's falling. Let me go ahead and short this. Well, no, shorting would be like, I'm betting that at this volume pivot, the bears win. Okay, well, then that's a good spot. Well, what is this? It's just a candle. Like that shouldn't trick you in anything. You found lower lows. That's not really meaningful. Right? Today, if I wanted to be a bear, if I was long and it lost this and then it returned to there, then I'll short on the crash, right? The meaningfulness, well, it's supposed to hold 90% of the time, and then it's on the 10% of time. So let me get on the other side because the low probable move when it happens is very swift and severe for like a reason, right? How do I decide to exit the wrong trade? Is it points or amount of money? It's anytime I lose one strike distance off of a high volume pivot that I can produce. So any pivot that I choose on NASDAQ is 40 points and S&P is 10 points in non-volatile environment. That's it. That's how I know I'm wrong. If I lose 40 points off a high volume pivot on NASDAQ and 10 on S&P. It's equivalent to one strike distance in QQQ or SPY. And markets tend to move from strike to strike or those distances on average when they're looking for equilibrium because that's where options balance out. So get used to like looking at the market moving in 40 and 10 point increments based on what you're trading. Like from consolidation, NASDAQ, right? Here's 20, like, let me show you what the 40 point thing looks like, right? Here's 20 to 60, right? Here's 80 to 220, right? Move, consolidate. Here's 230 to 270, move, consolidate. This is 40, 40, 40. Nasdaq just beautifully moves in 40-point moves. It's just a thing. How do I use S&P to order trade Nasdaq? They usually pivot at the same spot, so I'm watching one trading the other. But this kind of ends my time here. We had a great lesson today. Nice bull run-up day. Hopefully you guys learned that if you're looking for some ways to improve, try to examine your short game. It's probably the one that's messed up on average. Try to get better at shorting. That's all I'm going to tell you guys. It's not really your long game that's hurting you. Your long game's probably better than you think. All right, with that said, I'm out. Head over to my stream, you guys. I'm going to be live in about 1 minute over there. If you guys come finish up here and finish up the day. And we will see y'all later. Thanks for tuning in. Thank you, MyFunded. Thank you for the gifts. And thank you for the host. Thank you, Tom. Thank you, everybody else today. And we love you guys. And we'll see y'all today in the afternoon. Come over to my stream. See y'all later.
Yeah. Charts scribbled like hieroglyphs, secrets in the mist. Candlesticks whisper, every wick got a twist. Fibonacci spiral, price dance in a trance. Pyramids of profits if you catch the right glance.
Inner circle move, shadows on the screen. Trading on the edge, chasing that dream. Cipher in the candles, fortune in the haze. The cipher in the riddle, money through the maze.
Liquidity hunts, snipers in the dark. Stop loss graves marked by the market shark. Order block sermons, preaching through the pain. Catch the ICT code, ride the profit train.